We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Well. Hopefully everyone likes the setup here, and I gotta mute this for myself, and I gotta remember to bring back Kingdom of Finance. And now, Kingdom, everyone can hear your audio. All right, so
fantastic. Intel's trash. What's
boom.
up, guys?
All right. So as you can see, we're surrounded by fire. So we took it to the next level. We don't think it's enough to have fire in the thumbnails. You should have fire while you're streaming. So we're surrounded by fire. And this is episode 2 of You Will Lose Everything. And will you lose everything, Kingdom?
I'd say so.
You'd say so? All right.
All right. Can we start with my troll?
All right,
beginning,
go for it. Let's start with that.
All right. So like, I think JP Morgan is pretty cheap. So can we go look at the cash flows? Yeah, the free cash flow. Price to free cash flow. JP Morgan.
All right, I know where you're going to get this. All right, so we have JP Morgan Chase, right? You're looking at it $138.60. You want to see what? What do you want me to pull up?
What the cash flows, man? Yeah. Because like when it comes to valuations for banks, you gotta look at the cash flows, man. Like the free cash flows.
I don't know where you. Okay, yeah. By the way, he Kingdom said that he was gonna start off with like a bit of a troll. I think I know where he's going with this.
So it's not a troll to you, but like kinda,
Kind.
More so a cringe than anything else. More so a cringe than anything else. But
all right, so
explain to us, like, so when it comes to banks, is price to free cash flow the best valuation metric to use?
No.
Yes. No.
No.
Oh, okay.
Not at all.
No. Why not? Why not?
Because banks have, let's say, to put it simply, a bit more complicated way to they are a cash factory, so kind of judging them on like a cash flow basis can be a bit wonky, to say the least, and very difficult. I mean, you could do it, but like I don't recommend it. You'd be working way too hard to come to a conclusion, is my statement to you.
Oh, so when it comes to banks, what are the more appropriate metrics to use?
Honestly, GAAP net income does a decent job at telling you the true economic situation of a bank as far as the operations go. But let's say the health of a bank doesn't tell you enough. For sure, the health of a bank is actually the more difficult part to kind of evaluate, and the most important part to evaluate. But yeah, GAAP net income, go figure, does actually a decent job at what it was designed to do, which was communicate to shareholders how good a business is doing, which again, that's what GAAP net income is was meant to do. So it does a decent job for banks, insurance companies. Yeah.
Okay. So ladies and gents, do not use price to free cash flow for banks.
All right. That's what Kingdom wanted to start off with that. And okay, so that I didn't even have that in the topics for today.
It was good. It was great. It was great. 10 out of 10.
All right.
10 out of 10. All right.
We got a question from someone. I'll read out the question because Kingdom might not be able to hear. Oh, wait, it's bringing up the wrong one. There we go.
Yeah, I won't be able to.
What? It's not seeing. Yeah. Okay, so it's kind of weird. The widget is actually pushing up the comment from above it. So anyways, this question comes in. Are you guys both Canadians? Recently found channel.
I am Canadian. Fabio's from Venezuela. America.
Oh, okay.
The U.S.
Okay.
Right. Communist. No.
So I have to do it this way, but it works either way. I can kind of adapt to it. So someone also says, thoughts on Warner Brothers Discovery, Wall Street loving equals I'm scared since I hold it. And I guess I can also share, let me actually pull this up because now we have both of us here. And there you see JP Morgan Chase. We'll pull up Warner Brothers Discovery. So
the cash
Warner
flow
Brothers Discovery. Right here, $12.56. It's actually up 8% today. Are you buying?
I love Rick and Morty, but yeah, I avoid entertainment stocks like the plague. Their debt level is just insane. However, I'd say like a couple years from now, as they start paying down the debt, I'll be more interested in the company, but
So
not
wait
now.
and see for you.
Mhm.
All right, fair enough.
You,
I
you
think
got
I'm on the same
Netflix,
page there, but
so you don't really.
yeah, I was gonna say I'm a bit biased also. I had a small position in Warner Bros. Discovery, kind of like the watch position, and I actually have been drawing that down a little bit. I might take advantage on any kind of run up to draw it down because I'm content with my play, the one that I've chosen for streaming. But yeah, I kind of agree with Kingdom there. So that goes for that question. And
Yeah,
while
I
yeah,
love Rick and Morty though. 10 out of 10.
is that your favorite show by chance?
Oh yeah, yeah. Favorite show, favorite show. Rick and Morty, fantastic, just great.
Oh, just an
You know,
adjustment
10 out of 10.
on Discord. Can you lower my volume because I think that it echoes back. It's a little too loud for the stream. That might be causing it.
Okay,
Just
let's see
lower.
if I can.
Just right click me, and then you can slide the volume a little bit
Is it
lower.
good now?
Yeah,
Yeah, yeah. Is it good now?
a little
Okay.
bit lower, just a tad bit
Good,
lower.
good. Look, tad bit lower. All right,
I don't know
let's
if it's
see here.
echoing and reverberating off a wall or
80.
something.
Let's do 75%. There we go.
You had me at 100. Oh, okay. Let me see. Testing, testing. All right, we're good. It's like a faint, very far off muffle, which is fine. You have to really
Is it
raise
good?
the volume to hear that. Yeah, it's good now. Okay, so let's see.
All right. I just got to make sure I don't cut you off because it's now pretty low for me too now.
Well, I'll try to speak, normally. You can see me, by the camera, I guess.
Yeah.
We're working through these things. Right now we're working through the technical difficulties. The wonders of the internet can only go so far, and up there in Canada, they don't have. No, I'm kidding. I'm kidding.
No, like my connection's really bad right now, so you might see me go all over the place. So I'll try not to move as much so you won't notice it.
if you try, you can probably actually, let's see if the video off makes it better, the connection, because that way it only has to kind of travel with, you're going to see, by the way, if he turns off his video, you're going to see what his profile picture is. We're going to talk about this. Oh, you bet. Look at this.
Oh
ladies and gentlemen.
no!
Look at this. He's ousted. He's ousted. He is a
Listen,
luckin' coffee
man.
shill.
Listen. I could explain.
No, yeah, you got explaining to do. Actually, we're going to forego the other topics until we talk about this.
Listen, man, you got to give them second chances, all right? Come on
Second
now.
chances. What on earth are you talking about? They committed fraud.
What, man? I want tendies over here.
All right. Walk me through, because I imagine all of us are going to give you the benefit of the doubt here. I'm going to give you the benefit of the doubt. I already know what it is, but I'm kind of just playing let's say a character, a role, and pretending that I don't know what your rationale is. But give the audience your rationale. Why the heck would you buy a company that committed fraud?
Okay. Well, you shouldn't have. All right. So yes, they had some issues. All right, with their financials. They're little sweet lies here and there.
Sweet
And then,
lies. Sweet lies. This man. All right. Sorry.
All right. So it went down 96% when all that
Uh-huh.
fraudulent stuff happened. They filed bankruptcy and all that. I'm pretty sure China bailed them out. And they paid the SEC. They fired the executive team that did the fraudulent. Of course, they won't do it again. Trust. They fired everyone now. All right. So this is going to be a swing trade for me because I do believe that this is heavily discounted, which it should be. Heavily discounted because of their past actions of the previous executive team. So like once it doubles, I'm out. So I'm just trying to get my tendies over here.
Assuming that it doubles.
Yeah. I'm assuming if it doubles. Yeah. Like not financial advice. Don't follow me on this. This is a nice speculation trade for me, and I love coffee. So
All right, there was the keyword I was looking for. It's a speculative trade, and I'm gonna kind of, throw like let's say life support here. It's a sentiment trade, right?
well, yeah. It's a sentiment trade because people are morons when it comes to Chinese stocks. They're all useless, but people love to be degenerate, especially Wall Street. They think China is just going to allow the American people to buy their, Chinese investments when, China's gonna give Taiwan a little hug in a couple of years. But we'll see.
It's interesting you say that. They actually passed a couple laws that went a little bit under my, let's say, radar. It only came on kind of in my circle. more recently, and apparently, I think it was in 2020, they actually passed a law that kind of like as a counter sanction. So if any entity participates in the sanctions by a foreign entity that's basically targeted to the United States, they can seize all of the assets of that entity within their borders outright and arrest any officials that remain within their borders for whatever thing. But anyways, I don't know the terminology of what they would be necessarily accused of. It's probably, I don't think it's treason if you're a foreign national. I don't really know. But basically that law was passed in like 2020. Obviously targeted towards the United States, who under the recent sanctions, at least of Russia, kind of makes sense. We did also sanctions on Iran. So China obviously says, okay, well, what would they do to us if we did X? They'd probably sanction us. And so they passed those laws. But yeah, I agree with you. I have the sentiment trade on Alibaba and Prosus. Formerly, I had Tencent in that same trade. Small part of my portfolio. I do believe, or I don't believe in the broader China story, but I do believe in sentiment and how I can still make money off of it. So actually, I'm about to double. Okay, I'm actually about to get that double on the second tranche that I bought on Alibaba when I doubled the position. Again, double might sound like a lot, but everyone who's been with the channel for a while knows that double meant from a small position to a slightly bigger position, but still small, and kind of just for fun. To make a point and make some money. I can maybe go on vacation with the gains, but yeah, it's neither here or there. So on that second tranche, on that double, and I'm thinking about taking profits on that second tranche. It will be short-term gains for sure, absolutely. But I also have I'm now profitable on the first tranche, which was from 2021. And on Prosus, I'm profitable all the way. But the tranche from the first tranche, that's long-term capital gains already. So prefer tax treatment there. Okay, so we do also have.
But can we?
Huh?
All right. Can I? Okay, so all I'm gonna say with the Lug and Coffee one, like, listen. I wanted one Chinese play, and I'm like, all right, if I'm gonna have one, it has to be degenerate. So it just fit the bill. It just fit the bill, all right?
You're like, I'm already going degenerate. I need to turn that to the 11th power. Just
exactly,
crank
like,
it up.
It's basically leverage without the leverage, man. Like,
it's leverage without the leverage. Not
of it.
I think they basically recovered though.
Yeah, no, they did from those, but I still think it can probably double from here. So I don't know. This was a recent buy. I think I bought it right at the beginning, the first trading day. So,
dang. Okay, so we're real quick going back to Warner Bros. Discovery because I think we might have skipped over this part of the question. So Shane Baker asks us, what do you think about the sentiment change on Wall Street? So basically, I guess, do we agree or disagree with it? And here's the question.
I think it's a kangaroo thing. So, like, I think Warner Bros. Will always go up and down, trade sideways for like a couple of years. So that's a.
We're losing the Canadian moose over there. So basically, what he's saying, I'm gonna summarize, is dead money for a while. Which I actually would agree. And then once we get him back, I think we just got him back.
Yo.
Hello, how you doing? Long time no see.
Right. Yeah, I was buying a call option leverage on some coffee.
All right, so we also have another question from Z over here, Z Jason. So Capital Mindset Fabio. I love how people go at Capital Mindset then Fabio. It's like my full name is now Capital Mindset Fabio. How do you think about NLY? And I'll pull it up. NLY is a REIT. It's a mortgage REIT, and I know of it because it is very popular among the retail crowd. I do believe they pay a monthly dividend. Outperformed the S&P 500 from 98 till now. Okay, I just know today NLY outperformed the S&P 500 from 98 till now. Okay, so this is just a simple return. So what I'm going to do is I'm going to use this tool here, and I'm going to compare that. And we're going to see.
I wonder why he's interested. Totally not because of the 16% yield, right?
Yeah.
Yeah, totally not.
So we're gonna go with total return because I think that's fair, and I think the max is not gonna be proper. So we're gonna use 1998. So we're gonna do. Let's go down to 1998. And what date is this? We'll do from the first to today. 2023, January, and 10. Apply. Okay, my goodness, it actually has outperformed.
It's pretty good.
Yeah, huh? It's outperformed. So my question though is going forward, how will it do? I don't really know. I tend to stay away from mortgage REITs, but yes, actually it has outperformed from the beginning of 1998 all the way up until now on a total return basis. So that includes dividends, has to include dividends. Capital appreciation, forget about it. I can guarantee you it hasn't. But now, key thing with the dividend return, because it's actually a REIT, remember that it's going to be taxed unfavorably to the shareholder, the portion that is considered not return of capital, which I think is going to be the majority of it. And so that part's going to be taxed at your highest income tax bracket. So truly, the most tax inefficient side of dividend investing, the thing that people really complain about, is absolutely true when it comes to REITs. But you also have to think about it that, you know, since it's a pass-through entity, they're not being taxed on the corporate level. They're just being taxed on the individual level. So it's technically, you know, kind of the same in that respect. It's just who's paying it. So you're responsible for the full bill. And in the case of a C Corp, they're responsible for part of the bill, and then you get a preferential tax treatment. Then when you add the two together, kind of ends up being to about 40% anyways. So yeah, if you want to be on the highest bracket, that's going to be 41% as long as corporate taxes do not change. But anyways, kind of getting back to this. Okay, interesting. I actually didn't know that on a total return basis. So I just kind of seeing it for the first time before my eyes. However, I'm not really too interested in mortgage REITs, but yeah. So one thing you kind of want to pay attention to with these guys is kind of the spread that they can generate, similar to a bank, but not a bank because they're not a bank. So the spread that they can generate by the raise of capital and what they can issue it at. And so it's kind of up in the air, especially when we kind of see what's going on now with like the yield curve inversion and where our long-term interest rates really headed, how that's going to affect it. So if I actually shorten this time frame to kind of let's say more recent decade, I don't think it's outperformed the market, and kind of think about the conditions that we are in since at least, you know, around the year 2000, a bit of a slowdown in the economy, and then that kind of progressed into 2008 and so on. So kind of my quick thoughts on that. Your thoughts, Kingdom?
I'm not good with REITs, so I can't really comment on it.
All right, fair enough.
So.
Okay, so Fuhat here is asking thoughts on Al Rock.
Oh no, get him out of here. No more asset management. Let's talk something else.
Well, I'll tell you, Fuhat, I'm waiting on Al to kind of show themselves a bit. All right, that's my honest opinion to you. I that's how I've shared my thoughts with you before. I believe I'm gonna wait and see. And Al, for anyone who doesn't know, is a new asset manager on the block. But unlike KKR or Blackstone or even like BlackRock, which is kind of different, or Brookfield, they have to show
Field Aries, you know.
Yes, correct. I agree. We have another question. Honeycomb. Fabio, how do you feel about buying stock when it's at all-time highs? Yeah, that's sometimes the hardest thing. I'd love to hear your thoughts, Kingdom. We might have lost him. What do you think about buying a stock at its all-time highs, Kingdom?
Yeah, I never do. No.
Never?
I always get. I never. It's always nerve-wracking for me. I don't know. I never done it, never will type of thing. Besides the index, so
yeah, because the index is something you can.
Where I think like you can bet on the future of the U.S. economy, right? But like with individual stocks, it's like, okay, it's at an all-time high. And if the valuation still looks good, I'm still like, what am I missing? There's something going on here. Because if everyone loves it, if Wall Street loves it, retail loves it, that's like the time to get out, right? So that's the way I go about it. So I don't know.
The
I don't know,
contrarian
man.
approach.
Exactly. I'm always contrarian in that department, right? Like, so, like, for example, Costco. If you're buying that at all-time highs, man, great company, right? Costco, fantastic, exceptional business, but overvalued, I'd say.
No, yeah,
So, yeah,
I would agree.
stuff
Costco at
like
these
that.
levels, yeah. All right, so we got
Yeah.
one quick concept I want to
Costco is
kind of
still very
cover.
overvalued in my
Which
mind.
one? Which one's overvalued?
Hmm?
Which one's overvalued?
Costco.
Oh, yeah, yeah. We're both in agreement there. Absolutely. Fantastic
Yeah.
company, but yeah, I would say it's overvalued.
Hmm.
Or I wouldn't be buying it here. It's not my cup of tea at these prices. I'd be looking elsewhere. I just
Mhm.
wanted to cover a quick concept about dollar cost
If you,
averaging.
sorry, I was just gonna say, I was just gonna say,
Wow,
oh, look at this.
the lag is insane right now. I think we're
So
like
bad. That's why I said,
5 minutes
oh
behind each
man,
other. Hey,
I already called it. The leg was gonna be bad because we use OBS. Hmm. Oh well.
uh, that's why Ethernet is king. Ethernet is king.
Yeah.
Yeah, turn off the video because I think the video actually helps a lot with the signal.
You think?
Yeah,
All right.
because
If you
as
guys
long as
want to
the
see the luck in
audio.
coffee.
Yeah, no, we get luck and coffee, or you can. I mean, you can change it if you want, but.
No. We'll keep it.
All right,
I'm
so
keeping it until I sell it.
yeah, you better sell that. Like, don't I would not be. Well, it's a speculative hold for you. All right, so I wanted to talk
Yeah.
about dollar cost averaging into anything and kind of talking about why that doesn't necessarily work with individual stocks. It's a concept that other people have talked ad nauseum about, and I feel like I just wanted to bring it up since we were on the topic of buying things at all-time highs, and why doing that with, let's say, an index fund doesn't necessarily mean it's a bad thing. It could be the peak, it could be, but let's say there are moments where obviously the index will break into new highs, and that doesn't mean that you just stop buying at that point in time. So the method of dollar cost averaging into an index fund works because it's actually churning. It's churning through itself. And as long as the broader market will continue to grow over a long period of time, you're going to do well. But that's not necessarily the same case with the company. You shouldn't be blindly doing it. Now, I think in the spirit of the sense of dollar cost averaging into a stock, what people are really talking about is reanalysis of a business, concluding that nothing has really changed of that business. And then they say, okay, well, basically, I am still highly convicted in the stock. It shouldn't be like a sunk cost fallacy, kind of that I think a lot of retail gets trapped in. They bought it at $25. Now it's $1, Tattooed Chef. And then they say, well, I'm going to dollar cost average into Tattooed Chef. I'm using an extreme example, but remember, there was a time when Tattooed Chef on this platform was not considered to be a dangerous stock. The
Oh
good old
wow.
days.
That's crazy.
The good old
Yeah.
days.
I mean, like I'm a firm believer, like index, dollar cost, absolutely. But when it comes to individual stocks, I will lump sum. I will never do DCA. So like Amazon went to the low 80s, boom, instant 7% allocation. I did my lump sum. I'll do another one if it hits the 60s. Type of deal.
All right, you got us into one of the topics of today, Amazon. All right, Kingdom. Thoughts on Amazon?
It's still severely undervalued, but I'm not buying it at 89.
Okay, you're not buying at 89. You're done buying, basically.
I'm done buying for now, but if it hits low 60s, I'll do another lump sum on it. But like I think AWS alone is worth $1 trillion.
Interesting. All right. So we'll unpack this a little bit because Amazon's been in my portfolio for a long time. It used to be a lot larger position. Now the trim looks really smart. But where Amazon is now, it's a little tiny little former shadow of itself. So I have let's say a history with this company. And of course I might be, my vision of the company might be covered with rose colored glasses because, we've done well with it. But as far as the business goes, when I kind of take a look at this and I see kind of the sentiment begin to change on Amazon, not even a year ago, I think even I don't know if it was Todd or Ted was buying Amazon. It was at a crazy valuation. I wonder if I'm one of the people that was selling to them. Maybe. Who knows? It's always fun to speculate on those things. But anyways, where they are now, as a business, ignoring the stock price. And this is always the discussion Kingdom and I had off camera. None of you guys got to see this stuff, but people in the Discord community got to see plenty of it. It was really focusing on just my appreciation for the business model. And I still think that the best days of Amazon are not behind it, but in front of it. The stock price, but what you pay for that future really does matter. And I would agree with Kingdom that I'm not like the most excited person here, although I actually cannot buy it right now. So even if I wanted to,
Yeah.
I have to wait.
I'm very curious with how they'll penetrate the smart home business. I still strongly disagree with the iRobot acquisition. I think they still could have built one in-house a lot cheaper. And I think that when you buy a lot of garbage assets at overvalued prices for a long period of time, it can be detrimental to your business. So iRobot alone might not look that bad, right? Twitch alone might not look that bad, but like I don't like those businesses, and I don't know. I think like they could have absolutely made something in-house, something like Fire TV, right? So I don't know.
Oh, absolutely. But it's not for their robotics division is probably ahead of almost everyone. It's not for the robots.
I agree.
It's entirely for the data, and for them it's like a little munch because iRobot as a company is minuscule. Which, by the way, if you guys were wondering, since we're mentioning it, IRBT is at a merger arbitrage opportunity right now because I think the buyout is I think the buyout's like $65, something like that. I think it's $65, but I can tell right now if based off I think it's 65. 60 something, I know that. But this recent run up right here, that's because they got the buyout agreement from Amazon. 62. Thank you, Dan. So $62 per share, and you're seeing a separation, a pretty decent separation. It's been challenged, I think, in the EU, in the UK to be specific. United States, I haven't seen a challenge yet, but there could have been one. I'm just not paying attention to this daily because I'm not participating in it as of now. Will I? I don't really know. Actually, I'll pass that over to Kingdom. Do you think it's going to go through? Just for fun, you can say.
Well, bro, I'm starting to get fed up by the EU and the US government. They keep like trying to like, oh no, we gotta reject it. Why? I mean, if they reject it, I'll be happy as an Amazon shareholder. But like, I don't get the logic. No, we can't. Because again, at the end of the day, it's more so about the consumer, correct? Like, you're like, oh, it's pricing power, and they're gonna price gouge and all this. But like iRobot, like, what's there? What's there? Like just some random little vacuum thing? I don't know, man. I think even the Activision one was kind of goofy to me too. Whatever.
Someone also is asking you this question. They want to know your thoughts because you talked about not agreeing with iRobot. The acquisition of iRobot. They're asking you about what's the One Life, I think, One Life Health or something like that. I forget the name of the company.
One Life Health, is that the telehealth for Amazon or some shit? Oh, sorry, not trying to swear.
It's a business that has these clinics. It has a telehealth business inside of itself, and they developed it in-house.
Right.
Yeah. So basically, it's like primary care clinics at corporate offices, and I think it's One Life Medical. I lost the question here, but it's somewhere around here. I was trying to bring it up.
I strongly agree. I strongly agree with that acquisition because they're trying to build out that pharmaceutical side for Amazon. So like, I kind of like it a lot. So that one's good. That one, like, as long as the integration is like very seamless, it's fine. But like with iRobot, my thing is, and I would agree with that one. It would have been more expensive to kind of build out because with pharmacies it takes time to build that relationships with the people and all that stuff, right? So
I'm gonna push back again on the iRobot thing in a second, but because it is super easy. It's super easy for them to build their own robot, but that's not what they were buying them for.
No, okay, you're gonna say the data, and okay, but
But
like my
that's
thing
it.
is this:
There's
they can
no.
build.
They don't care about the robot. The robot's
No,
super.
no, no, no.
Yeah.
But like again, they can build their own, and since it's Amazon, people are gonna buy it, and then you can collect your data again, not for two flapjack and million, a bit billion, right? So I don't know.
They'd have to compete on their, let's say, marketplace, and they can't just cut out iRobot. They got to get in your home, collect it. It's just much easier and seamless to just buy them and done.
Like for example, no, like for example, Roku. For example, Roku and Fire TV. Like Fire TV came in there, had like no market share, and now it has. I'm pretty sure it has more market share than Roku now. So
Yeah,
I think Amazon would have been the same thing because they had their own product, right? iRobot is its own single entity, while with if Amazon built out their own, it would have integrated with like Alexa and all that other stuff, and would have been good. So I don't know.
yeah.
It's a nitpick because yes, it's a nitpick because at the end of the day, it's still a very small amount of money, but like it's more so. I don't want them to make those same repeated mistakes in my eyes. That's all it is.
Yeah. Okay. Okay. I mean, I would have been probably more critical of it if it was like, I don't know, a 20-30 billion dollar acquisition. But at its size, I don't think it's not going to harm the business. But like I said, I know they could have done it. It's fairly easy for them to replicate something that iRobot currently does. But again, that's not what they were buying. They don't care about the vacuum business whatsoever. They could care less. Simply the data. And in order to kind of gather that data, it would take a long while. They already get the data from Alexa. They already get the data from Fire TV. It's just now kind of overlaying the household and what they can tell from the individual consumer, how best to advertise. Everything I think is kind of coming home to roost for Amazon advertising. That will be larger than Meta in probably a couple years.
I'd say so. Yeah, like, well, what would you think? 4.5 years, something like that?
Yeah. Yeah.
Yeah.
It's going to be Amazon's fastest growing business for a while, and they are potentially going to be, not potentially, they are the most valuable ad target. Someone who's
I
trying to
agree.
spend their money. Go
Yeah.
figure.
I
But
think I honestly think the growth is going to re-accelerate after 2023.
okay, so Michael Hills is saying Amazon buy iRobot for they automated fulfillment centers. So it's probably a play to get robots cheaper and the technology. I'll tell you that it's not really for the iRobot robotics technology. It's not really for that. The Amazon robotics internally is absolutely insane. And they have their own robots that they already use in their own warehouses and fulfillment centers. iRobot, again, nothing really special to it, just simply the data. And that's it. That's really it. A lot of smaller robotics companies compete with Amazon on a daily basis, and I have, I guess, intimate knowledge about some of those businesses and how hard it is for them to kind of retain their best talent because Amazon basically just poaches them. So it is what it is. you know, the Amazon company
Amazon
says here's a
is
lot of money.
basically yeah, Amazon's basically just an ETF. Like they got a collection of great things that synergizes well. But again, I will be having a microscope and being cherry picking with their acquisition targets, with ones that I think doesn't really go align with their core structure. So
Yeah.
I don't want another Disney. That's all I'm saying. I don't want another Disney. I don't want another General Electric. I just don't want any of those, right? Like those very rigid structures. I just don't want that for Amazon.
It's just if they're gathering data, that's not a separate business entirely. That all integrates to their advertising. In advertising, you need as much data as you can get. There's no such thing as too much data on your customers. There's no such thing. The most that you can get, the edge that you can get on your competitors in advertising, the better. And so iRobot is just a small price to pay if you're really thinking about the picture of what they're trying to build out with Amazon ads. Amazon ads is going to be that's what I provided as far as like my ideas as Amazon's long-term picture, and I think a lot of people are kind of forgetting or dismissing that, and it'll become more obvious in like the next 4 or 5 years how big Amazon ads will be and why the retail segment is not something I would even be paying attention to, only so that actually, it's going to sound kind of funny that I say it this way, that the sales growth is actually growing in the retail segment, not necessarily the profit. I actually don't care too much about the profit in the retail segment. Cloud, I care. Retail, meh. If they turn some profit, great. If they break even, great. If they turn a small profit, fantastic again. But the true moneymaker, the true cash cow, ads, and you have a cloud that has been the cash cow for a while. So if they can just make it a platform where the first thing Kingdom here thinks when he says, I'm going to buy X, the very first place he thinks to go is Amazon, they're winning. And that's all that matters. And then Kingdom all of a sudden becomes a very valuable target for advertising. And Google wishes they could have, and I'm a proud owner of Google, and Google presently is a larger position in my portfolio than Amazon. But I'm saying I'll admit this. If you're an Amazon bull out there and you're feeling right now that everyone's poo-pooing on your stock, Google wishes they had that customer to advertise to, who's like saying, I want to spend money, right? YouTube is trying to introduce products to me that I didn't even know I wanted, right? Versus when I go on Amazon, I'm like, all right, I want a rug. And then all the rug sellers are going to be like, I want to be in front of that customer. He wants a rug. Or I'm on YouTube and then I get like an advertising for like, I don't know, some freaking life insurance. And I'm just like, I don't want life insurance. But eventually maybe they'll hit me with something, if they're good enough, with something I might want, right? Google Ads is really good in this because if I Google, let's do an example live. Actually, it won't work on here because I think my ad block is going to block it. But
like, let me give you but like the best ads will always be from Etsy. But it is what it is.
No. Let's just go here. All right, so just pretend for a moment, because it is true that this would happen. If you were receiving ads, then you would see the ad come at the front, right? So that's what would happen. Let me see if there's a way to. I'm gonna see if I can just pull it up here. I want to show like the ads. I guess you guys will trust me on that. Just believe me. You guys used Google before. I was gonna pull up like another thing, but anyways.
I mean, they all use Bing because Chat GPT. So
Yeah, no, okay. Well, that's a separate topic. What is this? This is not Ford. Forward Industries. Oh yeah.
Yeah, you got it. Just F. Yeah.
But I was trying to show the advertisement. So like if you go on Google right now, you'll see Google Ads, and then Google's like, okay, you wanted to go on Ford's website, and you'll see Ford's website, the non-advertisement one. Again, follow along. I have my blocker on, and I don't want to take it off right now. Follow along. Just Google Ford, and then search. You'll see the first one that comes up is either Ford or another company, and it's usually maybe a competitor that's like, no, wait. We want to show up in front of that customer first, and then they pay Google to be there. But you can have Ford also being paid to be the first thing to show up when you search Ford. And then underneath that, you'll see like the Ford website that Google does provide to you. That's a non-ad, and it won't have the ad thing next to it. And so that's a good thing for Google, because Google is basically controlling the search, right? It knows what you're looking for, and it can provide to you. And if there are clients out there that are like, wow, I want to show up when the customer searches this, put me there, right? Well, in the case of, and it's still always in search of that, I'm trying to convince you of something that you want that you didn't yet know you wanted, right? That kind of thing. That's still what Google Ads is all about. And Google search in that key category is better in the case because it already kind of knows what you're looking for. And then Instagram, Facebook, or Meta products, Snapchat, all of those are trying to, again, show you something that maybe you didn't know you wanted. Now, when you go to Amazon, they know exactly what you want because you're looking for that thing right then and there, and you're looking to buy something. I search on Amazon, I don't know, laptops, toilet paper, whatever it is I search for. Amazon knows I'm looking and I'm thinking about buying that. And I have now become the most valuable form of advertising target, right? were you gonna pay for me to show up in front of me, or are you gonna show up in front of the, I don't know, the guy on YouTube? Who are you gonna pay more? I think over time you're gonna pay obviously a lot more to show up in front of the guy that wants to spend money. Just a thought. I don't know. But anyways,
If we can talk about Ford just for a second,
go for it.
I think people are going to be disappointed with the returns. Because again, at the end of the day, all it is just transitioning from their ICE vehicles to their EV vehicles. So how much true revenue growth are you really going to get out of that? I don't know. I don't think it's going to be as much as people think. And if you want to talk about Tesla just a tiny bit, Tesla's margins are going to get real bad real quick. Because now they're going to start tailoring towards the lower end market. So that's going to be very detrimental to their margins. So watch out. Watch out for Tesla. That's all I got to say with that one.
I will say, we'll talk about the valuation we'll come back to Amazon because we're getting some questions about your comments on Amazon. But all right, so comment on Tesla. I agree with you as far as the margins go, because this is a story that they're going to continue to grow. So the expectation was they were going to continue to grow infinitely, or at least at very good rates for the foreseeable future for at least 10 years. And that margins would maintain themselves, if not expand a little bit, but at the very least maintain themselves. And market share wouldn't, trickle down. If anything, would trickle up. They had the tailwinds of electric vehicles becoming more prominent. All that's true. Tesla, I do not hate the car, do not hate the company. I just don't really haven't liked the stock price for a long time. Hindsight is 2020. However, we were saying it back in the day. So, you can't do that to me.
Yeah, hindsight capital.
Hindsight capital, exactly. That would be the commentary there. So, with Tesla or Ford or any of these are car companies to me. I'm not really interested in Ford, although the Ford story is actually one of margin expansion, by the way, Kingdom. So I want to actually show you with Ford's business here going annual. You see the revenue decline here and the revenue stagnation. They actually made the switch. They got rid of their sedans and they focused on the trucks. The trucks is where all that. Yeah. That's where all the profits are.
I work in the automotive. Yeah, I work in the automotive space, and for each sedan, razor thin margins, if not even barely a profit. But the trucks, though, the margins are insane. Each pickup truck, they're getting minimum 10 to 20 grand in profit. So
we have a Ford salesman in the chat, and he can provide us unique perspective here. He says, "I'm a Ford salesman. The hype behind EVs is real, even with retired people." All right, so I would agree. I know, actually, anecdotally, I know a lot of people who are trying to get their hands on Ford Lightnings. And hey, maybe one day. Yeah.
I don't know, man. I think so my thing is this. I don't think when everything goes EV, how is that going to sustain on the grid?
That's not. I was going to say as a joke, that's not my problem.
Well,
no,
you gotta fuel your thing, if the grid shuts down. But
hey, that's more of you guys' problem. No, I'm kidding. You guys are producing a lot of energy. Are you guys producing a lot of energy where you're at specifically?
Yes, but the infrastructure is bad. It's very outdated.
Okay, fair enough.
Yeah.
All right, so
again, the energy isn't even the problem. It's more so the infrastructure. It's very rigid, very old, and we need to do that transition to nuclear a lot sooner. But again, we know how the government works. They're as efficient as the China.
Have you seen that breakthrough in nuclear?
No, it's good.
Yeah. Okay. But anyways, we won't get into that. Sticking to the topic at hand, I think that, yes, and I see from the comments section, we are seeing that margins should be going up for legacy automakers, is something Bacon Bombs is saying. And I actually would agree with that case with Ford, because in this specific case, the transition that they've done in hindsight is actually looking good for the business. Longer term, they got rid of sedans. They're like, let's not compete in that. The Ford pickup truck is perhaps the most iconic and strongest pickup truck brand in the United States, actually by far, I think. And that's kind of carrying the business in the future. So that transition looks good. The electric vehicle or the electric truck looks like it has a lot of steam behind it. Tesla has yet to release a competing truck. I know how Tesla bears are gonna, feel about that. I know how Tesla bulls are probably gonna feel about that. Tesla bulls are gonna be like, it's coming, trust me. And then Tesla bear, or they'll say, we don't need that to fulfill the story. And then Tesla bears will say or point to that. You see, he doesn't, or he as in Elon doesn't fulfill any of his promises. So it's kind of the nuances there. I imagine you have thoughts because again, you work in the automotive sector. So what do you feel about the Tesla Cybertruck?
I mean, TLDR, all it is going to be is, Ford's going to do, I think Ford is probably going to end up being the number one player. I mean, they already are the number one player in the truck space. So EVs to trucks is not even a joke. Toyota will, but we're talking about overall vehicle makeup. Toyota will still probably be number one. Honda, Hyundai, Kia, they're all still going to do just fine. But I'd be shocked if GM is still around 10 years out. I'd be shocked. GM is so trash.
All right, you heard it here, folks. Spin out.
Yeah.
Here first.
Yeah. They should spin out Chevrolet and then just go bankrupt. Just do that. Easy money. Yeah. Like that's what they should do. But whatever.
They should spin off Chevrolet.
Who am I to judge?
Okay. So that's the business inside of it that you think has all the value.
Yeah, because of their Silverados and all that. Again, another pickup truck, right? Truck margins and all that. Yeah.
Hey, what about the Corvette?
Corvette? Yeah. Give that to Ferrari. I don't know.
Give that to Ferrari. All right.
Just give it to Ferrari. Whatever.
Take right there. All right. Let's see if there's any more commentary on this topic here. So,
Isla. Anymore.
Uncultured Currency made a video yesterday on Tesla. Well, but you see it's a little bit wonky, the widget. F-150 is curious what margins will be with the Ford Lightning. Yeah, no, I think they're going to be crazy. I think everyone here is in agreement. All I sell is F-150s. Yeah, so you see it's wonky with me. All I sell is F-150s. See, there we go. We heard it from the horse's mouth here. And we're seeing this. All right, it's kind of scrolling through. Capital Mindset. Will you now give us your view on the most important energy company? Most important? Wow, my goodness. Like, I don't know how to answer that. What do you mean most important? I don't know what the most important energy company is.
Yeah.
Dang. I'll say this. I'm longer term, like this decade. I'm kind of. Not kind of. I still am in the bullish narrative, or I still subscribe to the bullish narrative of the energy decade. When I mean energy, the energy stocks because I'm looking at the capital investment that we're doing, and it's pretty abysmal. And I don't see any signs of changing. So again, the reason why I exited energy when I did is my concern for demand destruction 2023. We're in 2023. And I don't know. Let me see. Is the market even reacting? Let's pull up, I don't know. Exxon.
My thing is, you're probably still right on that. It might just take another year for it to all crash. But I will say this: it's definitely a different situation than what happened back in the 2014, 2015, when all the oil companies were doing a lot of investments in all these different places, and oil just crashed because their capex went up.
Yeah.
This time around, they're just doing buybacks. Cleaning up their debt. So it's a different situation this time around.
And that's the case where I'm going to say, like, it could have been, let's say with me playing with the soap, although I'm not going to complain because I did do really well on my ConocoPhillips, and back in the day when I had Occidental, I did pretty well. I could have done way better, but I did pretty well. But with ConocoPhillips, that was still a really good performer in my portfolio. At the end of the day, if I were to buy back, I don't know if it's higher, but it's not like that much higher right now. Yeah, it's actually close to the price where we got out, so it's not too far now. Yeah. But yeah, I think that narrative, if that kind of continues, the reality, if that reality continues for a while, these companies, the oil price has to fall a lot before they start to be unprofitable again. So, and if there really isn't that investment in future production happening, well, that's it. It's their runway, it's their decade. At that point, after so much of energy dead.
Yeah.
Narrative.
Yeah, and also there's mass consolidation as well. You're seeing all the bigger players acquiring a lot of these smaller ones. So you're seeing this consolidation. They're doing the buybacks, cleaning up the debt. These companies are probably going to do just fine.
Oh, so. I'm seeing, Elemental's comment. He says, Fabio, my audio just completely dodges the question about my favorite stock. All right, it's because I'm hesitant to say the name of that stock. You can say it in chat if you want. I know what the name of the stock. Yeah, he just put the ticker because it's a nano cap. It's a nano cap.
Well, it's a nano cap. Then no,
Yeah.
no, not
No,
on
but
here.
I think it's even better. So yeah, yeah. Anyways, it's a nano cap. So
No. I will say this, man. Both of my best performing stocks this year are nano caps, but yo, it is what it is.
Yeah.
But yeah.
Whoa.
Not on here.
No kidding.
No, whoa, 20 million market cap. All right, anyways,
All right,
anyways,
let's see what else is coming up
moving
here.
along.
Moving along.
Yeah, moving along. All right, we don't need to talk about that.
Let's see here.
You want to go cybersecurity?
Yes,
Or-
we were going to talk about cybersecurity. Absolutely. Say less, as you say.
Yeah. I gotta say, the CrowdStrike one, I just don't get it. Y'all are clowns for buying that. I'm just kidding. But like, no, but seriously though, I think CrowdStrike is definitely top 3 in terms of like best cybersecurity companies in the public markets. There's still plenty of them that are private. But like, my thing is with a lot of these cybersecurity players is like how much value you're truly going to get as a shareholder, right? So that's why I'm still fighting between Palo Alto and Fortinet. I might end up buying Fortinet out of them all because that's one of the few ones where their shares are going down. They're doing decent buybacks. Their SBC is less than half of that of CrowdStrike. And keep in mind, like Fortinet's like 38 billion, CrowdStrike's like 20 something billion, something like that. So larger company. So I do think I'm going to get, and again, people are going to say Fortinet is the lower quality, right? Out of all of them, tomato. Like I still think there's going to be plenty of winners in this space, right? And they all do different things. That's the thing. When people compare like CrowdStrike to Palo Alto, I kind of cringe a bit. I'm like, sure, one segment of Palo Alto, yeah, they compete, I guess. But that's like saying Apple and Google compete. They no, but all right, maybe like one segment. But I like Fortinet. I think valuations are getting pretty attractive for it, and I think like a CrowdStrike, when you account for the SBC, it's barely profitable. So that's why people, I don't know. And when you look at Fortinet, when you put in account the SBC, still pretty solid. So it's still like 1 billion free cash flow.
Yeah, because Fortinet has transitioned over to a buyback strategy. They're returning capital to shareholders right now. But
they've done it for a while. Yeah.
They've been buying back shares right now, right? See, I would wholly disagree with that right now. Because there might be
it's fine
pursuing...
though. The valuation's a lot better. Look, the valuation for Fortinet right now is better than CrowdStrike. When you account for the SBC, CrowdStrike's valuation is still pretty atrocious.
What's Fortinet's growth right now?
20+%.
Okay, it's still growing. I think that's a little bit above industry, maybe in line with industry.
Yeah, I'd say it's above, but not by much. But CrowdStrike's growing like something 50+%. Here's the issue though. How much of that are you truly getting as a shareholder is what I'm getting at. The company can do its thing. Like the company can do great. The management, the employees, they can all take fruits of that. But how much are you getting that as a shareholder is my thing. And I don't think you're getting as much as you might think. So I don't know. I think even Palo Alto, their SBC CAGR with their cash flows aren't that bad either. So Fortinet and Palo Alto are the ones I like. But CrowdStrike is definitely, in terms of company, if we talk about company alone, absolutely. CrowdStrike's up there. But in terms of shareholder value, I don't know. So.
Okay, see, because how I've been feeling about it is I have nibbled on CrowdStrike recently. Oh, that's a spoiler alert for the portfolio update. All right, there you go. I have a small, tiny little position in CrowdStrike. And with CrowdStrike, and by the way, that's like pretty normal. I bought stocks that I still think are not at the best value before, like Adobe. Adobe was one we bought. And we just made like a tiny little, it was a watcher position. Point is, it's kind of like the beginning process, but I don't know. I kind of would push back on the Fortinet story. I mean, they're growing nicely. I don't think they're as undervalued as I would say enough to justify the investment for where they're really growing. They are growing a lot slower. If they're growing like 20%, that's significantly slower. And what's the multiple they're trading at? I saw Google what Google was saying, but I'm not going to trust that. I'll just go
Their
with
cash flows, I'm pretty sure. I think it's in the 20s now, low 20s. Price to
Oh,
cash flow,
okay.
not free cash flow.
What? Wait, what do you
Not
mean? What do you mean
yeah,
not free cash flow?
not free cash flow. Price to operating cash flow, it's more like in the 20s. So
Oh, okay. And then they're net negative in dilution, right?
it's there, yeah, net negative. Yep.
Net negative in dilution. But what's their earnings? Because the SBC is going to be counted in earnings, and then they're just basically grabbing the cash and just reducing that.
No. That's my thing. It's like I still think I pretty much got rid of because again, when I was researching all these cybersecurity companies, again, a lot of them are again, if we look at isolated to the company itself, all of them are great.
Yeah.
But I do punish companies with SBC greatly, especially from a Canadian where like a lot of my software companies have no SBC because they actually pay their employees, but whatever. Something that software companies in the States don't understand. But whatever.
Whoa,
Like, maybe pay your employees, man. But yeah, what all right. But so for me, SBC is a massive thing. Like if your SBC is like Palantir level trash, then you're out of here. So, but if we isolate it, I got rid of CrowdStrike in terms of companies I'm done researching because I'm like, nope, you guys are egregious with your SBC. Zscaler was another one that I thought, okay, this is a great company. They're growing really fast, insane. But even that one, the SBC, when you account for it, they're actually free cash flow negative. Cloudflare is even more degenerate in that department as well. But yeah, but Palo Alto, Fortinet, those are the two I'm looking at. And yes, they're growing slower, sure. But I don't know if you want to have like the Lafufu approach where revenue my revenue. Let me buy the company. I don't know, man. That's just whatever. How much of that revenue are you really getting?
All right, I'm just gonna pull this up to kind of measure it out, and let me go to linear measure. So not as egregious. Ignore this. Don't know what all that was about. I don't know if that's an error. That's sometimes what the problem about using these things.
Is like reverse stock split or something? Or sorry. I mean,
ignore that. Ignore that. I'm just gonna go with like the past 5 years, and then we're gonna change up the measures here because just going on
you can put in the other comparisons. Yeah,
yeah,
like
that's what I'm gonna do. Let's go with
CrowdStrike.
It already knows, but the thing is,
it already knows. Palo Alto and put in a Zscaler.
Zscaler.
Or you can just keep those three. That's fine. You can keep those three.
Oh yeah, CrowdStrike's the one that's making it a little bit wonky, because they didn't IPO until.
Yeah, they're still relatively new in the markets. It might look a little messy for them.
Okay, so where are we at? So we are at Palo Alto, Fortinet. Okay, but this is my point, right? So we're still seeing rapid growth with Crowd and Palo Alto, and Fortinet. You're kind of buying the value. It's not the value play. The value play is Checkpoint, and Checkpoint, by the way, go check out the video on Checkpoint I have on Capital Mindset. Everyone, it's aged well because I said that Checkpoint would outperform its peers, and it has outperformed its peers because of how cheap it was. I didn't buy it because I have no interest in it, but I'm looking at this and I'm saying, okay, you're buying Fortinet, not you specifically, but I'm saying philosophically, we're buying Fortinet because we're like, it's the value play of these three, but it itself is probably on the high side of valuation. I mean, we'll go over like, I don't know, some like.
Look at that price to cash flow. Look at go down, go down, right there, price to cash flow.
Price to cash flow. All right, we'll go with this too.
Again, they don't have, and again, keep in mind the capex is gonna be very low for a lot of these companies, anyways. So but yeah. Anyways, but if we look at valuations here, Palo Alto looks pretty interesting.
I mean, CrowdStrike looks very interesting by that same meaning because you got one that's growing.
Okay.
Yeah.
No. Include the SBC. Then CrowdStrike's valuations is trash. That's what you need to add in. You need to add in the SBC and the net dilution.
So when you look at the net dilution for like the past 1 year, I don't think it's actually that big for CrowdStrike. I think it was like 2 or 3%. Because remember their valuation was insane.
Right, and and if you want to do another comparison, compare the S&P 500
I
with all three of these cybersecurity
everyone on
companies.
YouTube was not able to see any of that, and I really apologize.
Oh, bruh.
But now they can see it. They can see it. All right, I'll go back. I'll go back real
Okay.
quick to the what we were looking at before. So we were looking at this before, and you can see all the stocks. We're including Fortinet, CrowdStrike, Palo Alto, and then we went from here, kind of showing okay, Fortinet's at 50.43, CrowdStrike, Palo Alto, they're measuring at negative because they're not GAAP profitable, and then again, my point, like you're buying the value one, not Kingdom literally, but like you philosophically. And it's still like, is it? It's growing at 20%, getting at a multiple. This is surface level analysis, right? It's not like
No.
gold,
Yeah. Again, when you look with the SBC, it punishes you as a shareholder. We can compare all three of these companies side by side in terms of their returns, and you are seeing that massive divergence. Palo Alto and Fortinet, they're pretty much in line with the markets in terms of returns. SPY's down about 20%. Palo Alto and Fortinet both are down maybe like 25%. They're pretty much very in line with the markets. But CrowdStrike's down 50%. And I do think dilution is definitely a factor in that.
All right, so let's
you're
take
truly not
this.
getting, and again, when you factor in the SBC, you are getting punished very greatly. And that's the thing. Like again, if we can have the discussion which one is the better company. Like, we can have that discussion all day. But like again, I'm just trying to make tendies over here, right? And like, when it comes to that, I don't think CrowdStrike you're gonna get the most, bang for your buck.
Yeah, I'm looking at. I broke it down by quarter here. You can see it, right? And for the YouTube audience, move it down here. So we go here. And you can see it by quarter. So basically what I'm seeing here, it's accelerating. And until we kind of see any sort of meaningful slowdown, it's gonna take a ding. So you have to pencil that in. Longer term, I think I've penciled out around a 2% something around there dilution rate. Longer term, because there is a cap out. And if I had my other tool, I would measure like the rate of change on an annualized basis, because you can kind of see from quarter to quarter the rate of change on visually doesn't look like it's huge, and then there's like a jump here and then a jump there, and I'd be measuring like what is the rate of change between this and here and here and here, and then that's going to tell me in terms of scale how are they faring. And this is in 2020, the IPO 2019, around wherever they IPO'd. Yeah, I forgot when they IPO'd.
Yeah. Yep.
Oh, okay, they did. All right. So yeah, that's something I'd be looking at, and let's go ahead and go back to here.
Again, I think that like no, and here's another thing. CrowdStrike could like let's just say for a second, CrowdStrike is the best company in this space. Absolutely. But again, you're not going to get much of that in terms of returns if they're just, giving it all to their management team and their executives in SBC. You're getting none of that because of that dilution rate. And you got to factor that in when you're investing in these types of companies, especially these software companies that get away with so much SBC.
I'm going to ask you this question because Andrew wants you to answer this question. Capital Mindset, ask Kingdom if he's okay with 2.5% less returns for Crowd company versus Fortinet.
What does he mean by that, though?
I believe he's referring to the that's the difference in SBC. It's 2.5%.
Wait, is he comparing the SBC with the revenue or like the market cap? What is he comparing that to?
We'll get
What's
more
that
color in a second. I guess we're gonna get more color in a second.
Because
by the way, if you guys are liking the stream
isn't it?
and you like the content so far on the stream, you want to see more of these episodes weekly, feel free to leave a like. Just leaving that in there. Market cap.
Why are you comparing? Market cap. Why are you comparing the SBC with the market cap? You should compare it with their cash flows. In my eyes, I don't think you should be. I don't know.
Well, because it's basically like it's kind of like how damaging is it, right? Because it's a percentage of the business that's going away from your ownership.
Yeah, absolutely. Okay, if that's what you mean by that, okay, no, that's fine. That's fair. Oh no, now you got trading. Oh no, that's not his name anymore. Uncultured Currency. He's now.
Do you look at the price action at all? I know you don't trade, but do you look at how many people are buying? Here's the comment. How many people are buying Crowd because even getting in and exiting for 25% profit is an investment is still solid. And then that was the continuation of his comment here. There you go.
Okay. All right. Well, I'll give you the short answer. The short answer is I invest in companies for the next 5 to 10 years. I couldn't care less about, that Aunt Jemima's buying it right now and she's selling it and whatever. Like I don't care about any of that. I'm just trying to buy a company that's undervalued. That's a good quality business, undervalued. They are very shareholder friendly. And I just kind of chill at the sidelines, got my price, wait 5, 10 years, and then sell it or whatever. Obviously listen to all the quarterly earnings and all the 10Ks, all that stuff. But like, again, the more complicated a business is making it for me as a shareholder, the less attractive it is for me. So I feel like CrowdStrike out of the three is making it more complicated for me to make it a long-term investment. Again, I'm not trying to trade it. If you guys are trying to trade CrowdStrike, you think it's like oversold with your RSI and your LMNOP and your whatever, fair play. Do your little trade, whatever, get your 20% squeeze. I try to find multi-baggers and companies that I hold for the long term. That's how I go about it. So
I agree. And
the SERP is the GOAT. Aunt Jemima, I'm telling you that. But yeah.
That's not from Canada, though, is it?
Yo, it is. What? Yo, Aunt Jemima's everywhere, bro. I bet she's in Sri Lanka too.
No. Is it from Canada? I don't.
Oh no. I have no idea.
That's
I have no
saying.
idea.
That's okay, no. I know it's in Canada. Jeez, no. It's like, oh yeah. Do you guys have Doritos up there? Have you heard of this thing called Coke? Like
yeah. There's thing called Coca-Cola.
Yeah, Pepsi. Ring a bell? No, maybe. Okay. You're pronouncing it wrong though, Jap says. All right, so
oh my bad. That's the Indian accent then. My bad. So like yeah. Go ahead.
Well, I was gonna say I agree with what you're saying there. I'm just looking at it. My view is I'm looking at these three companies and the valuations are compressing, right? Good. Finally, this is great. This is good. This is good for me, who's a prospective buyer, and I'm looking at, okay, which one am I most excited to pick up if prices get cheap? If prices get cheap, because I'm not saying, see, I always have to draw that distinction because it really does, I think confuse some people, especially when it sounds like I'm defending a company like hard, right? And it makes it sound like I'm really bullish on the stock, but I'm just defending the business. And then when I'm defending the business, it's because I'm separating the business from the stock. And then it's a separate discussion if I'm buying like a ton of the stock right now. But of these three businesses, the one I'm most interested in is CrowdStrike. And on the relative valuation, I am seeing personally that CrowdStrike is the one I'd get the most excited for if it got down to the, let's say, call it a good price, versus what I feel like the businesses are going to perform like in the future, how each business is going to grow. All the research I've done thus far is pointing that CrowdStrike is my favorite. It's funny enough that CrowdStrike was the YouTube cybersecurity stock, unfortunately.
Correct.
Yeah.
Correct.
So, but it's also, I think, I'm trying to look at it objectively and not trying to allow that to cloud my judgment on it. I think it's the best one. Palo Alto number 2, and then Fortinet number 3. Now, Fortinet is the value play here of these three.
Fabio. Fabio, I'll even go a step further. I'll say CrowdStrike number 1, Palo Alto number 2, Zscaler number 3, Cloudflare number 4, Fortinet number 5. I'll even put Fortinet number 5, okay, for the sake of the argument. My thing is, Fortinet does more for their shareholders than all these other companies combined. Because when you account for the SBC, the valuations for all of them are overvalued, severely overvalued. Fortinet is the one that's I'm like, okay. Oh, and Zscaler is ZS. I don't know if you can add 5. I don't know if you can add 5
what
or 4,
but look who's messing this up. Look what.
Oh, dude, No. Cloudflare is a degenerate one. It's degenerate. If it wasn't for SBC, I'd be buying Cloudflare all day, every day. But I love Cloudflare. I think they're fantastic. Them and Zscaler. If it wasn't for SBC, these are the two I would be buying. But and Sentinel-1. That one's a fun one too. But because of SBC, I pretty much pushed it down to Palo Alto and Fortinet. But again, if you want to put that argument that CrowdStrike is the best one, I agree. Sure, you could do that. I'm not sitting here saying Fortinet is like the best company.
I don't agree
I'm
with
not.
Fortinet's capital allocation though. If you're telling me they're buying back shares just willy-nilly, just buy at all costs, I think that's poor capital allocation. They used to, by the way, Fortinet.
Yeah, you know what's poor allocation? Freaking like pooping on your shareholders and just pooping on your shareholders and diluting everything. But all right.
Well, that is a way for businesses to pay without expensing cash. All right, it's
okay. So the Palantir approach. All right.
No, it can get excessive, absolutely. But that's like basically the investors footing the bill right now. It's the equivalent of the investors footing a bill, right? You're the owner of the company, you're footing the bill. But out of like your pocket as an investor, you're giving up percent ownership of the business so that the business doesn't have to borrow money.
No, and Fabio, that's my point. With their SBC being egregious as they are, I'm a cheap man, all right? That's the Indian genes in me. I'm a very cheap man as is. So like I ain't trying to pay for no one else's whatever. Like you got to figure out to pay your employees on your own. I ain't forking the bill as a shareholder. So when I look at it that perspective, Fortinet's the one that makes the most sense. Now I'll be honest with you, I prefer the Canadian software companies like they're far superior. Whatever. That's just me.
Well, but they do different things. Do you guys have you guys are bound? Well, yeah, BlackBerry. You guys have.
Whoa. Listen, they had their time. They had their time, man. They had their time.
How could I forget about BlackBerry?
Whoa. Man, come on now. Come on.
Whoa.
Whoa, come on, man.
Well, do you guys have another Canadian cybersecurity stock?
No. Like I don't even want to mention any of them to you.
Oh, so
they're all
you do. You
degenerate.
have a bunch.
They're all degenerate.
All right, I know you.
No, they're all degenerate. No,
I know you have some interesting. You were talking to me the other day about the software companies that are involved in logistics,
supply chain and logistics. Yeah. So for example, Descartes Systems Group. Yeah, the Descartes Systems Group, like little to no stock-based compensation, growing very nicely. Cash flows are really good. They have the best balance sheet in their space. They are the leaders. But those are the software companies I'm more interested in. Cybersecurity, I feel like it's very crowded in terms of Wall Street and retailers alike, that even right now, the valuations are getting interesting. I agree, but it's still not where you want them to be. And that's why you said it's for you. It's still like a nibble position or whatever. It's not some like all-in position right now or whatever.
As of tomorrow, I'm kidding.
Oh, no, as of tomorrow, 50% all in. It will be. I don't know, man. It's interesting. But again, yeah, we can have that. Yeah, we can have the discussion of like if we isolate it with company alone, absolutely. Like, yeah, CrowdStrike is definitely one of the better ones out there. I'll go the degenerate route, and I'll be like Cloudflare is like on top is there as well, and Zscaler and SentinelOne. But like again, when we use our little, when we put our little, brains on and the financials and all that, when it all makes sense to a shareholder, Fortinet and Palo Alto are the ones that make more sense in that department. So, once you stop drinking the Kool-Aid, so.
I mean, okay, but if I was like, looking at this at current prices, I wouldn't be even buying Fortinet. I mean, I think I think Fortinet, on the basis alone that I don't agree with their capital allocation strategy right now, because I know it sounds, but their Fortinet is diluting not too much less than CrowdStrike as a percent of market cap. Sorry, stock SBC as a percent of market cap. And then they're turning around and grabbing the cash flows and just buying it back up. And at elevated prices.
I disagree. I don't think they're elevated prices. I think Fortinet's undervalued right now. So if they're buying back shares right now, I'm perfectly fine with that.
Really? Okay. On what basis? Because like they're growing at what, 20-something%?
20+%, and again, their valuations don't look that bad right now.
Comparatively,
and again, I gotta keep hammering this. When you deduct the SBC with their with CrowdStrike, the valuation's a lot more elevated. Not as much for Fortinet.
What is throwing this off? Okay, it's CrowdStrike. Is
Oh
CrowdStrike
yeah.
throwing this
Well,
off? Yeah.
yeah,
it is.
yeah. Again, yeah. CrowdStrike makes it a little bit wonky
All right,
because they're still relatively new.
let's go off of, I guess, Fortinet's relative history. Oh, look, this is actually a nice chart. They kind of go, look at that. They kind of go in line
Oh,
here.
yeah, they're pretty much. And look at that. Now you're seeing a little bit of divergence. That's why I keep mentioning Palo Alto, because I think Palo Alto might be a good option as well. Now the thing with them, they're not doing the buybacks. You're kind of seeing that resistance with their valuation. Because of the buybacks, you're actually seeing a situation where Fortinet's valuation is still keeping a bit elevated.
I'll tell you this.
Even though I would argue Palo Alto is the better company.
Fortinet used to not have any debt. Now they do. I'm kidding. That's not
Now
like
they
the end
do,
of the
yeah,
world, but they used to have a pristine balance sheet. I prefer companies with, opportunistic buybacks, not buybacks at any cost. I hate.
I agree.
buybacks at
I
any
agree.
cost.
We don't want a sleep number situation. I agree. Like we don't want that.
Well, that's degeneracy. That's like putting the buyback on a credit card.
Yeah. No,
Okay.
bro, that's literally what they did.
That's what they did. So.
It was a revolving credit. That's literally what they did. But no, like again, I think you know what? We're all fighting about this, but at the end of the day, like they're all winners. It's just I think the returns for all of them are going to be vastly different. And I think Fortinet, yeah.
I love this because when disagreement happens in the streams, people love it. I think people watching like it because the worst thing you can have is like people yes.
Oh yes,
absolutely yes,
Senpai Fabio, yes, Daddy Fabio, yes, you're always right. Yeah. No, I'm a contrarian. I'll always argue no matter what. Is sky blue? Nah, it's purple, bro. Your eyes are wrong.
But then I can trick you. If you're like that, I can trick you to agreeing with me, but you don't have to know that you're agreeing with me. But all I need to do is to get you to agree with me by just saying the opposite of what I'm thinking.
Bruh. That's all I gotta say.
Look, I'll say this. Look, this is actually a good comment, kind of counterpoint to you from the audience. I'm not going to be able to pronounce your name, so I'm going to call you ZK. So with the same way of thinking, you would have chosen in 2006 eBay over Amazon because eBay was buying back shares and Amazon SBC was higher. That's a good point. That is a good point. That is a good point.
Yeah, true.
Yeah. Oh,
no. Because
what? It's
no. Hold up.
Okay.
Hold up. What's that one thing that all the e-commerce use to compare? Because Shopify was penetrating eBay. eBay was higher than is it total merchandise volume? What is it called?
I think it's total merchandise volume. Yeah.
Is that what it is? Okay, so no, I would still disagree because I would understand that Amazon's penetrating and they're increasing their merchandise volume over time. What I would have done at that time is probably bought a railway company.
Whoa! But you're basically talking about the unit economics, and the unit economics is like insanely in favor of CrowdStrike.
Whoa! Listen, man. Listen. Listen.
All right.
Oh man. No. I mean, no. You know what? He has a point, right?
It's a really good point.
Go with a second tier company. No. Like, go with a second tier company or go with the higher quality company in CrowdStrike. It's like. I really hate SBC, man. I really do. I hate you Americans. I hate you Americans. That's all I got to say. You guys are... Ugh. That's all I got to say.
Yeah. And by the way, Andrew's making another point here. You would have done well with eBay in 2006. You would not have done poorly. It's just Amazon was insane in 2006.
Dude, Amazon was like tendies on a... Yeah, it was good.
Yeah. So it was like Fortinet. You might do well here, but like another one of these names, I don't know which one, might do even better, right? So
love how
it's about
I love how Thomas is like SBC. SBC is how you attract best talent. Yeah. I mean, yeah. Let's Palantir. Yeah. Palantir. Yeah. Of course.
No. There's a point. There's a point where it is egregious, but. Even with Palantir's main problem was its valuation above SBC. Valuation was like the biggest reason, and the employment cost, right? It's just being measured differently. So SBC is just the same cost, but measuring it in a different way. So instead of a cash, you know this. I'm just preaching to the choir. This is for anyone listening.
And I'm not trying wait, and also, let's go back to the eBay, Amazon just for a second. Back in 2006, because again, hindsight's 2020, but back in 2006, okay, let's be honest here. All right, Amazon was a lot more of a riskier investment than eBay, because again, it was not profitable. Nobody knew like what they were going to turn out. AWS was still not a thing, right? There's just things that played out over time
Yeah.
for Amazon. If Amazon had AWS, their returns wouldn't that be that great. If they didn't have Fire TV, same thing. So comparing those two, like, oh, look what happened in the past, bro. It's a different company. It's a completely different company now.
Yes.
So, suck it. No, I'm just kidding. I'm kidding. I'm kidding. But you know, but
Dan,
yeah,
Dan's question's good too. But I'll say just quickly there are switching costs to a lot of software businesses, including cybersecurity. There's people within the Discord who you should ask, Dan, who work in the space, and I'm sure they'd be happy to give you a quick explanation on that. But yeah, there are.
yeah. I would say like the barrier to entry to develop some software company out of thin air is very low, but the switching cost is very high. Um, Again, this is
If
why I
there's a
don't like
firm that you find that doesn't have a solution right now, and you're a brand new software, or let's be specific with what kind of software. If you're providing mission critical software to a firm already, and there's another software company that comes in and let's say it's slightly better, even measurably better, they're not just going to switch right then and there. It's not the way it works, but that can happen, and that's why switching costs in SaaS businesses is so important to kind of pencil out, because in that moment of, let's say, deflection where the competitor can't penetrate your customers as well, you could maybe work on your product. I'm making it sound easier than it is, but that gives you time. That gives you some time to figure things out. It's not like there are probably some softwares out there or some services out there that the switching costs are very low, and I'm not investing in them because if I find them, I'm gonna avoid them. I hope to acknowledge them when they're there. By the way, maybe I don't see it and I invest anyways. But
yeah, I don't. Yeah,
Mhm.
yeah. I'm not trying to go back to the eBay thing, but here's again, like with investing, it's like you always say it too, like nuanced. All right, like there's just things that happen to these businesses. Like again, eBay back in 2006, if they'd done certain things slightly differently, they would have been ahead of their competitors, right? So that's the thing. There's just some issues with their capital allocation and all that stuff. But yeah, whatever. Um, I don't know. I think a lot of these cybersecurity companies, I think they're all going to be winners. It's just the return is going to be vastly different from one another.
Okay, so
That's all
we're
it
all
is.
in agreement there. Oh, I just smacked one of my other screens. We're all in agreement there. The return potential in the cybersecurity space is good. The prospects are good. We're just all, up in arms about which one will be the one that takes us there, the one that brings us the good juicy returns.
Yeah, that gives us the yacht and
I wouldn't even say
and all
yacht,
that.
just like, but yeah, fine. Let's
Yeah,
be out there.
island. Yeah, an island. Yeah,
An
my bad.
island. An
Mars.
island.
A Pluto. Whatever.
Oh,
Like the actual
bump, ba-dum,
tendies, man.
bump, 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 bump. So we're gonna jump to this question here because it is a super chat. So Capital
Okay.
Mindset: at which price will you buy MNST? I know it's expensive, but it outperformed the S&P 500. ROIC 10-year median returns 27.5%, and this is Monster Energy, by the way. So
Yeah, Jeremy LaFay's best performing stock.
Monster Beverage Corporation. Let's actually pull it up because I prefer actually MNST.
The Google Finance, yeah. It
Google
looks
Finance
nicer.
chart, the basic chart is phenomenal. They could easily just institute like a. Just wanted to show everyone this in case you never seen this company ever. Yeah, those returns are real. It's a drink company.
It's ridiculous. That's what my Luck and Coffee shares are going to be. So
No,
that is
they're
what it is.
not.
No, like come on, attendees, bro.
But yeah. Another one that recently was like Celsius, but Celsius Beverage Corporation. So I think more recently, even in the past 5 years, it's still outperformed the market. Like, phenomenal business. So one of the best things about this business, even though, let's say, we can say what we want about the beverage drink, it's a simple business. The margins are incredible. The unit economics are really well. I mean, it's kind of like similar to Coca-Cola. Different than Coca-Cola, but similar enough that I can draw that comparison. And the only company I can compare it to, really closest thing, smaller version, Celsius, but really not really. And Red Bull, obviously, but Monster is kind of like a unique case within the stock market. So sitting at 52.45 billion, geez, I would tell you that it's kind of reached a stage where I don't think the growth is going to, be all that great, but they're still actually no, scratch that. I think there's still untapped growth. There's a lot of parts of the world they can still expand to, but
I think
yeah,
you
it's
want
a
to be
tough
careful
question.
with that because a
Yeah,
lot of those other companies, yeah, you want to be careful with that.
where I'm at with this is it's kind of one of these companies where everyone knows it's a fantastic business. There's no secret whatsoever, and if anything were to change, I'm going to be holding a bag. If anything were to change. So, in other words, there's no margin of safety. So it just has to
You want to
continue
show
along.
you want to show the Celanese chart as well, like that one is insane too. Celsius,
Celanese.
sorry, Celsius,
Oh, okay. I
sorry,
was like
Celsius.
Celanese. It's not
No, Celanese, no, my bad,
Celsius.
Celsius.
What's the ticker? There it is.
EEL. Oh, you got it. Yeah, right there. Yeah.
So he didn't ask about Celsius, but also showing you Celsius. That's the closest thing I can kind of think of in the past 5 years. Wow. Right there. So
Yeah, attendees, man.
yeah, no, seriously. So kind of the same story, but everyone's going to try to find the next Monster beverage. This was technically as close as you can get to the next Monster beverage. 5-year performance, I mean, absolutely ridiculous. And unlike, let's say Tesla hasn't given up a lot of those gains. It's still holding up a ton of those gains. In fact, it had this little bottom out in the beginning of 2022, and in 2022 had a fantastic year. Unlike the market.
If only we were day traders and we could time the bottom like that, like these other YouTube traders.
But with Monster Beverage, if they can kind of push their business model into, let's say, other beverages, which I'm seeing chat adding me here. Let me see if they're talking about this stock because, yeah, the biggest part. Okay, so we have actually 2 comments on this. Let me find you here though. Bring you up. The biggest part about Monster Beverage is that they have the Coca-Cola distribution network exclusively secured by 20% ownership in Monster Beverage by Coca-Cola. Yes, there is that also. It's always with these partners, man. They have already the network out there, and you have to kind of play ball. I think the same thing happened with Dr. Pepper.
Well, yeah. Dr. Pepper.
That. And then Kevin Mine said they still have a lot of growth you aren't looking at. They are now breaking into alcohol. Huh. I mean, what, like energized alcoholic beverages? I mean, yeah, there's room in that. And the seltzers, alcoholic seltzers. I mean, there's a lot of like dinosaur beverage companies that have been loaded up with debt. The one I'm thinking of is Anheuser-Busch. You guys have heard of that? BUD, ticker symbol BUD. Absolutely destroyed by capital firm. You know the name of that capital firm, the one I kind of don't like. Everyone knows the name of that. I'm gonna give the chat an opportunity to guess the name of that firm. Yeah, they another victim of that firm is Anheuser-Busch. They identified in their investor press the emerging markets they are breaking into. So we're gonna do good by this, and we're actually gonna go to the investor presentation and bring that up. Kind of see what the pitch is by management. I see that. Let me actually pull up something else simultaneously. I want to see what kind of the projections are. All right, first let me get the presentation. One thing at a time. If they have one right here available for me.
Are you looking at right now?
No, I'm going to bring it up.
Oh, okay.
All right, so
Oh, I remember. Yo, I remember Sam. Oh man, Boston Beer. Oh, I remember that
yeah,
one.
Boston Beer Company, right?
Yeah, that's an interesting one too, because now they're fixing their inventory issues that they had. That one might be an interesting one. I don't know. I like the management team over there at Boston Beer.
Seems they
Hmm.
don't really have. Yeah, there you go. I got one. This is this is 2022, so this is still as up to date as we can get. It's the beginning of 2022, so keep that in mind. All right, so let's kind of go through here. All right. Oh wow, right there. All right, so flagship products, and this is their strategic acquisition. So I think what are these? Yep, pale ale. So alcoholic beverages right here. No. So the company is actually, honestly, they should probably change their name.
Oh, you want them to change their name now?
Yeah, it's something else. I don't know. Just well, obviously keep not the Monster brand. No. It's the name of the company. Something else like Monster.
Oh, the holding company,
Yeah, the
like Meta
holding company.
Platforms. Yeah. Okay.
Yeah. So like there's something else. I don't know. Actually, no. Monster beverage. It's broad enough. Actually, scratch that. It's broad enough. It's broad enough. In fact, maybe
Call it
that's
the
actually
Dolo.
good.
Yeah.
Yeah.
Yeah. Call it the Dolololo Holding Foundation. I don't know something.
The
The Belly Boy Foundation, man.
Oh my
All right.
goodness. All right. So let's see here. So they are getting into alcohol. We just saw those brands. What is this?
We gotta look at the ESG. We gotta look at the ESG. Come on now.
Of course. Now, what are they
Of
doing
course.
here? Let me just see what they're trying to highlight here. The company experienced a number of challenges as a result of anticipated. Experienced increased import costs, aluminum cans. Okay, but it seems like they've been navigating that just fine. And then at the end, I'm going to tell you probably like a rough price point, because it's not an analysis, just like a rough price point as to answer the question from the super chat. Where would I be interested? Wow, okay, so this is actually exactly what I would want to see. So this is their product breakdown. Energy drinks is just 15.5%. Call me dumbfounded. I would have had no idea.
Yo, I had no idea either. No,
I had
like
no idea.
bro, sparkling water, bruh. I mean, sparkling soft drinks. My bad, but like, okay.
No, I mean, wow.
Huh.
Okay, so this company's like, so they literally grabbed their cash cow and truly diversified themselves here, and they're using the Coca-Cola distribution network. So,
Yeah.
wow,
Yo, good for them. Wait, how much percentage does Coca-Cola have stake in Monster? It's like 10, 20,
20%.
20. Yeah, okay, yeah. Quite a bit.
This is Monster, yes, uncultured currency. All measured channels, snapshots, 13 weeks. And then while I have this, I mean, this is the energy category. So they're going to break it down by category now, which is nice. Let me actually... All right. I'm going to have this bringing forth the data. NST, MNST. All right. While that's working, I'll be doing this. So total unit share, all measured channels. Okay, so that's that. What is this? Energy category. Gen Bang Energy. Is that Bang? That's Red Bull, Full Throttle, Monster.
I don't know any of these terms. I never drank an energy drink, never will. Those things are pretty bad
Okay,
for
so
you.
help me out here, because you don't know this. I am my eyes cannot see these colors very well. I'm guessing this is Red Bull right here. I can see this color. That's
The red
Monster. That's Monster.
Yeah, that's Monster, yep.
Total. That's the total. So Red Bull has the highest market share, followed by Monster Energy, which makes sense. Anecdotally, like my wife will. Where's Celsius?
Well, if you yeah, look at Celsius. You can see that massive roaring to the upward trajectory.
Oh yeah, right down here. Yeah.
Yeah, right down there. You're seeing that penetration. Well, okay, so that's interesting.
5 hour
They
energy.
are.
That's degenerate.
Yeah.
5 hour energy. Oh, Bang. I think isn't that the one that just went bankrupt? I'm pretty sure Bang is gone. Was it Bang or the other one? There's another one. Bang. Bang.
Yeah, you got to be careful investing in this space, especially the smaller ones. It's like
Yes,
it's pretty hard. It's pretty hard, man.
Bang was sued by Monster Energy, I believe.
Oh wow, that's hilarious.
Yeah, for
man.
patent infringement, if I remember correctly. I know they filed for bankruptcy, but I think it was patent infringement. And Yeah. Okay. So yeah, I'm getting confirmation. Yeah, Bang went bankrupt. MNST owns their primary competitor. Yep. Awesome.
Yeah, how ridiculous that is, man. Monster is just a monster. Well, no, in their
Whoa.
name, a monster.
I I don't know if they no longer have distribution in Russia, but
Other
yeah, you can
Russia?
kind of see here.
Yeah.
Coca-Cola system bottlers, exactly that. And look at that. Look at what country they're in there.
They're in Afghanistan? There's no way.
They're in
How?
Afghanistan because
How?
they have an
Who's
independent supplier, and also in Japan.
are they getting it from like are they getting it from Afghanistan like on a camel? Like what's going on there, man? Anyways.
They're getting it to
Anyways.
you. They're getting it to you.
I
That's the
don't know.
point.
Like what's going on there, man?
Okay, so with Monster Energy, like what's the let me actually kind of see what is the growth rate people are kind of penciling out, because I think analysts are still kind of penciling out mid-teens growth for the foreseeable future, kind of closer to the 20-ish%, and then kind of cooling off depending on which analyst you kind of project. Just going off of that, yeah, for Monster, yeah.
I my thing is, isn't that already all priced in? And so like if that's the case, your return is gonna be pretty garbage. I don't know. Here on fourth.
Yeah, that's the question. Like, how certain is that reality? And then that's going to be kind of what multiple people are paying.
Yeah, this is why I prefer smaller companies, man, because I do truly believe it that markets are very efficient. And they get more and more inefficient the smaller you go. And when I mean smaller, I don't mean like nano caps. I mean more like below 10 billion market cap. So, I don't know, man.
And let me do this, change that up. All right, so man, if I think the growth, let me go back to this price, because I was requested a price point, and this is just rough. This is just for fun here at this point. If I saw any weakness, what was it? What was it in bottom of 2020? Yeah, that's like the bargain basement price. That's the price. I'll tell you right now. I did a quick plug-in. This is like the price point where, and I let me set it for that year. Okay. Yeah, basically, if it was 2020 and the facts were set before me of 2020, I would probably be nibbling or building a decent size position around that. Not like a big position, but around there I would have said to buy. Here I can't be confident in buying at all. The weakness, man, I do have it like at, let me change this estimation here. I want to put that instead. Low 60s, mid 60s. If I think they're going to grow like at 20% around there, yeah, this is I get no margin of safety here, man.
Yeah, I'm gonna just say it. I'll never buy it, probably. I think the valuations, because if you look at historical valuations for Monster, it tends to be pretty rich, anyways.
You're basically
not something I'll
touch. I mean, the
I'm not touching it. I'm just not interested. I prefer smaller companies. Yeah.
If I'm kind of really certain, if I'm really certain about those cash flows kind of coming out or coming to fruition, it'd actually be around the mid 80s. But that's like a certainty statement. Like that's if I'm that confident that growth rate is going to continue, and I'm kind of pricing in high mid-teens growth for a while. That's kind of where I'd be interested in keep taking a look at it. Maybe nibbling, but I can't justify it to myself. It's not within the price point where I'd be that confident in making it like a core holding. That's my final answer on that in such a quick time. That's the best I can do right now. But yeah.
Yeah. I don't know. It's one of those companies where it looks interesting, but I just don't think you're gonna get, again, for this company to just double, man, it's gonna take a while.
Well, I mean,
that's my thing.
It's not that story. Like the market's gonna, you're basically hoping there's no multiple compression, and growth rates kind of sustain themselves into the future, which I don't really like that setup. I think we're on the same page here. So,
Yeah. No. I think it's priced
fantastic
in for
business, though.
perfection. No. Like it's priced in for perfection, and like, you can't have any breathing room right now. So,
Yeah.
I mean, hey, good luck to anyone that's buying it right now. And speaking about the buying stocks at all-time highs, this is exactly a good example of that. So, I
Yeah.
don't know. It's pretty close to their all-time highs.
Yeah, fantastic business. If any risk kind of comes in and questions the narrative, questions the story, yeah, I would expect to probably see some severe weakness. And by the way, that can happen. Do not think that cannot happen. I think 2022 for some names should have shown you that. Oh yes, that
Oh yeah,
easy
rest in
money
peace,
stock. Yeah. Easy money
rest
stock.
in peace, Meta.
Yeah.
Yeah. Netflix, easy money stock. I gotta say, I love my cost base from Meta. It's great. It's all good.
Oh, absolutely. Oh, we got another super chat. All right, so this one I can give a little bit more color on because I already knew about this business ahead of time. Oh, it's doing that thing again. And I think we're going to come to a different conclusion about the prospects, just because REITs as a whole have actually gotten a bit hammered here. So this is the uniqueness of it. Have you heard of this company, Kingdom?
Nope.
You're the perfect candidate because you're like my vocal or verbal feedback. So I'm going to pitch it to you or kind of explain it to you as easily as I can. This is a REIT that invests in fields used to grow certain substances that cannot be named, that are not federally legal within the United States, but legal within Canada. Now, here's the proposition, right? Because currently the way it works in the United States, these businesses that are not doing something that is currently federally legal, but is legal in certain states, cannot access capital in the traditional way. So we know that in normal REIT spaces, we see something like a sale leaseback, right? That's pretty common. So you hold a piece of land within your portfolio and you're like, okay, how can I, let's say, liquidate or take out some of this capital that I have sitting inside this building or inside on this land? Well, I can do what's called a sale leaseback agreement with a real estate or whatever, whoever it is. And in this case, for these companies, if I want to raise capital, it's a very real prospect, and I can do so through a company like IIPR, which was a huge part of their proposition for a while. Now, one of the things that I'd be paying attention to is kind of if there's any management risk with some of these REITs. But barring that, which would be more research down the road if I was interested, which I am. This is actually a company I've been eyeing because it's quite unique. It's one of these more unique REITs. And there are interesting parts about the unique REITs. Another thing that I'm going to say real quick is a lot of these REITs are like a double-edged sword. So properties that are difficult to replicate or difficult to move around, it's not very easy, let's say, to find a new place to grow your product. If we're talking about if we're all on the same page of what that product is. And the same thing I'd say like with another hotel REIT, which you didn't ask about, like Vici Properties. Like you can't just build another Caesar's Palace down the road. But let's say Caesar's Palace goes bankrupt, right? Well, there's a problem there. Same thing with a lot of these properties, right? Now, with these, it's not the same because you could argue that you could transform that property into something else, farmland or something like that. Maybe you could transform the property. Maybe it's not so tied to something and it's not going to be as difficult or as capital intensive, which I would actually assume for these properties, capital intensive or CapEx for, let's say, renovations to something else. It's pretty much just like demolishing a greenhouse or whatever is there and building from scratch. But they're not situated in, like the middle of the city. It's not like prime A real estate. It's very much like almost like farmland in a way. But anyways, we can go to their website here and I can show you guys basically what it kind of looks like. So we can see, okay, let's let them do the talking, our business. So pioneering the real estate investment trust, regulated blank, because YouTube, I don't know, I'm not playing the game. Founded in December 2016, we are the first publicly traded company on the New York Stock Exchange. Oh yeah, by the way, let me go ahead and remove the comments so everyone can read along, and I'll zoom in for you guys because I know it's yeah. investors to acquire income-producing real estate as a publicly traded company traded in the NMSE. We are uniquely positioned as industry to access public capital markets. So unlike their tenants, they can access the public markets for capital and kind of do these interesting agreements with their tenants, and you're getting that exposure. So again, they are a REIT, so they have to distribute 90% of their taxable income in the form of dividends to shareholders. So for me, if I was to buy this, I would consider it in my retirement account, just so it doesn't count as taxable income, and it'll be taxed at my highest tax bracket, which can be a pain. So we focus on purchasing specialized industrial real estate assets for regulated blank industry. You see all that? Everyone see that? We believe that our sale leaseback, there's the word, there you go, and other real estate solutions offer. The other real estate solutions is they do a kind of other interesting things with their tenants. So again, it in a way it gets capital to their hands. They're not borrowing money from a bank because they can't. And yeah, but the sale leaseback is one way they can do that. We have acquired and intend to continue to acquire regulated blank facilities in states that permit license almost said the word. Oh, YouTube gods almost came down on me. I'm just kidding. I don't know if you can say that or can't say that. I'm just abundance of precaution.
I don't think anyone knows.
Yeah, exactly. Abundance of precaution. I'm not going to say anything. All right. If you read it, you read it. That's on you. You read the wrong word. All right. So kind of going to their portfolio. A lot of the REITs have it, so you can kind of see where they're dispersed. So they have some properties in Florida right there. They have pretty much all over the place at this point. Yeah, over here. This little corridor down here.
Yeah, pretty much all the states that are legalized, they probably have some sort of footprint.
It makes sense. And it's not really a sexy business for a lot of publicly traded REITs to enter. So they kind of have that first mover advantage. So you're also looking at that. Real quick, kind of going over the, let's go on some relative valuation measures here, because I think that's going to be important to kind of gauge here with what's going on. All right, so I want to see price to book for now. And we're on the percentage linear. Let's go on the 5-year to kind of see if it was probably trading at an insane multiple. So you can kind of see where it's at now.
Wow.
Yeah. So really back down, kind of back to, let's say, you can call it what you want, compressed levels. I will be lying to you if I wasn't saying it's not getting interesting now. Keep in mind that the book value in real estate for accounting purposes, it's not what they could sell the property for. It's what they have it on the books, net of depreciation. They have buildings and land. You cannot depreciate the land. You hold the land at cost, and it's done. You can write off land if for, let's say, I know that because this is a joke, and Bacon is going to love this part because of, he loves the land thing. But you can write off the land. Let's say if there was a massive earthquake that swallowed it up, then you can write it off, but you can't depreciate the land per se. There might, I think in IFRS, that allows for depreciation of land under certain circumstances. I forget. I haven't been working on that, but yeah, land is awesome on taxes. There is a REIT, by the way. We're not going to get into it yet, but there is a REIT that is really unique. It's with land, but I'll save that for like another live stream. So let's see. But anyways, how are you feeling so far about this? Have I done a good job or decent job at explaining this business so far? Like, do you understand what they do?
PLTR, they sell a certain product that is that a lot of people use.
They don't
basically
sell it.
a bunch of food hats.
Whoa. They don't sell the product. What are you talking about?
No. Of course. Whoa. Yeah. A bunch of foo hats. They love it. Taking the dabs and all that. It's good because again they got that first mover advantage. Again, you already know my stance on REITs. I think that if there's the amount of work that you got to put into a REIT and then versus just throwing it into an index is but you know what, this REIT actually might do really well. Yeah, this is probably a good one because again it's not like they're competing with anyone yet, so I think investing in the companies, how like the companies they sell it, like that might be a more
So this is kind of like
okay. That's
this is the way I'll say it. It is the least degenerate way to participate
For this space.
in this space,
Yeah.
by far.
Yes, yeah. No, I agree. Because like, yeah, because companies like Green Thumb and Trueleaf, they would be like, because even investing in them, I would say there's a lot of risk to that. Because especially since like it's still illegal in the federal side of it, I'm pretty sure they're just holding all that in cash. I'm pretty sure because they can't even open a bank account. So, yeah, this read is okay.
No, I think if you're really wanting to say, hey, I want to somehow capture that market, and you're looking around and you're like, oh my gosh, all of these stocks are like, man, each one looks worse than the next. And then you got this guy right here that's like, okay, well, we're doing things a little bit differently. And some say, by the way, that this is kind of a philosophy or a philosophical take on real estate. Real estate is like a way how you capture a piece of the business, like your tenant. You're basically capturing a piece of their business. Banks kind of follow a similar philosophy, but kind of sticking to real estate. Because like when you have like, I don't know, Realty Income, very popular REIT, all of the tenants, you're capturing in a way, you can think about it, in a way you're capturing a piece of their business. Their success is your success. So in this case, their success is your success, except minus the volatility of the capital markets. They can do whatever, dilution, blah, blah, blah. What you worry about is, can they pay their rent? And if they can't pay their rent, is there going to be a new company that tries to come up in their space and take it up afterwards? Because again, this is still very highly regulated, or it's going to be continue to be highly regulated. You can't just say, oh, I'm just gonna grow it in my backyard.
Pretty much. Yeah. So pretty much this is like the picks and shovels business. So pretty much you're just, you don't really care which company is the leader, which one. Because let's be honest, this space is going to be very commoditized,
Yes.
right? But you don't really care about that. You're just more so you want to, get the rent and get that. So it's good. It's good. Like I'm not. If I have to rate it out of 10, I'd give it like a 6. It's good. I don't know. I'm not sold on their moat, but that's pretty much it.
Oh, okay. I mean, well, the moat can be quite well established in real estate if you're acquiring all of the, or most of the, or the important parts of the places that are designated for a certain thing. Because like land,
Be honest.
the 3 Ls,
No,
like,
but
yeah.
But let's be honest. This thing can grow anywhere you want it to. It can grow like in your mom's basement to like whatever. Like I don't think there's just there's no barrier to entry to the. Huh?
Commercialized though. No, because like your mode is like the commercial companies. Like those are the ones who need to rent out your space. I know you're talking about the business itself versus like the common guy.
Yeah, the business itself. So I'm just saying, like, yes, they're the first movers, but like, I think there's gonna be, again, when the regulation starts coming in pretty like favorably, you're gonna see more companies get into this, and this company should do fine though. Like, I mean, I'm not hating on it. It's just just be cautious. That's all it is. But this should do just fine. But especially if you're buying those individual companies that sell this stuff. Oh yeah, rest in peace. But like, look at all their operators. Look at this. They don't care who wins.
No, they don't. That's the point. That's actually
it doesn't.
Yeah.
That's the point. Yeah. They don't care who wins. They're just doing their thing.
Yes.
They're selling it to all of them, so it doesn't matter to them.
If one of these guys becomes the absolute mega giant, well, they're probably going to need more and more space. As an example.
Yeah. So, and if they all consolidate and they're all commoditized, then same thing, I would say. So, if there's more smaller localized businesses, mom and pop shops, all that, they're all going to use, rent out from one of these guys, right? So, yeah, it's fine. Like if you're, again, like you said, least degenerate play, this is I'm trying my best to be a contrarian, but this one I think I'll agree. So whatever.
Yeah.
We can have another stock to disagree on, like your Intel, which is trash, but it's whatever.
Oh, we can talk about it.
Yeah, look at those. Yeah, look at that compounding though. Wow. I mean, I'm not shocked. I'm not shocked.
He's changing his mind.
Well, okay, so I'm not shocked it's done well.
Oh, and if I throw
and it's still
on
really
top of that, by the way, it's gonna.
Oh yeah. You reinvested those, like the monthly thing. So.
Yeah.
Oh, you know what?
Oh no.
You know what?
Kingdom's like.
No. You know what? No. I'll say it. I'm gonna look into this.
Yeah,
As
there
a,
we go. There we
I,
go.
I looked at that market cap. No, I looked at that market cap, 2.87 billion.
Hmm.
It's still illegal in a lot of others. Most states, I'm pretty sure it's still illegal. And they got the capital to penetrate that first, then the other guys. I mean, I don't even think there's another company in this space. So,
This
hmm,
comment's great.
I'm pretty, I'm pretty much selling myself into this stock, aren't I? It's
Oh, by the
crazy.
way, before you go, Uncultured Currency, thank you so much for the super chat. I saw that. He,
What did he say?
he said, I think you two, the two of y'all, should have a weekly show.
Bruh, that's what we're trying to do.
That's what we're trying to
But
do.
like,
You
yeah,
gotta escape from the oppression of the Canadian internet gods.
yeah. It'll happen one day, or we can go back to StreamYard. But whatever.
Oh no, we can try StreamYard because if that's actually the thing, we'll try StreamYard. This is just like I can do more things on this, but
Yeah. It is what it is. But yeah. Back to this. Yeah, I think the more I'm thinking about it now, I think this is gonna be. Oh, this is gonna be tendies, man. Hmm. Yeah.
yeah,
I like.
okay. It's a unique REIT. It's one of the unique ones, right?
Mhm.
And you're capturing a space that normally would be filled with a bunch of degenerate businesses, or is filled with a bunch of degenerate businesses
Oh no,
with
no,
no
it is. Yeah,
opportunity.
yeah. 10 out of 10.
Yeah, there you go. This is the way. If I wanted to play it, and this has been on my watch list for a while, by the way, Cherry Tigers. And did you see Cherry Tigers' comment towards you? He says, "All of a sudden, suddenly Kingdom of Green." That's what he calls you. Kingdom of Green.
Yeah.
Could you change your mind?
No. Like, no. Again. Like, it's not. I'm not gonna say it's hard to change my mind on stocks. Like, again, I was the biggest bear of Brookfield and Amazon until they came to the right price. So, but this one has already seen. Again, we're seeing a lot of high quality REITs like starting to come down in price quite a bit,
That's great.
especially on the industrial side. So, I'm looking at this one and I'm saying, okay, yield is still very good. It's still small enough where you're not seeing a lot of hedge funds that have access to this yet because of regulations and whatnot. So, yeah, and these are the types of businesses I like to look for. I love looking for companies below 10 billion and that they're growing decent amount, large market like the meme term TAM, right? TAM opportunity and all that. Market penetration and all that. So, this is a good one.
Yeah. If
I'll yeah,
I didn't
go
find
ahead.
out about this business until literally 2020, and it escaped me, by the way, just so we're on the same page. If I had found out about this business back here and wanted to get that exposure, I just wasn't looking in the wheat space at all. I didn't even think to say, oh, is there something else? And then if I would have found this, oh, like, yeah,
Yeah. I
give me
will
that.
say this. Canada, um, the blank green leaf, whatever. Those things in Canada, they blew up in the face because there's a thing called winter, right? Um, Again, a lot of these places in the States, like Arizona, Florida, California, even though I would never open up a business in California, a bunch of trash over there. But like, whatever the case may be there. Like, for the most part, yeah, I mean, it kind of makes sense with the States. And again, with Canada, you had like all that cash burn and all that degeneracy and like, ugh, like whatever. But again, with this company, you're not getting any of that. You're not getting any of that. So that's good.
Agree.
Like there could be a new player in this space, don't matter to you. The old player can be some big thing or whatever. So
One,
solid.
I want to say, I think it was Arthur's question. They have 22 employees. Yeah, that's not a typo. So a lot of these companies, they look at Realty Income, look at a lot of these big REITs. It's because the operational maintenance on any of these properties, it doesn't need a big employee force because a lot of it's triple net lease, and so the tenant is the one who takes care of the property. You're basically just having people who look for new properties to acquire. A lot of times the employees are actually just lawyers, so it's you don't really need big teams. I mean, if you want to think about this, like you'll find REITs that have a lot of employees. Think apartment building REITs because they actually manage the apartment buildings and such. So
You
it's a
want to
bit
show
more.
our nano cap REIT? No, I'm just kidding.
No, 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 no. We don't speak on.
No.
Now you tease them, and now they're like, "What is that one?" It's like, no, no,
What
no,
is that?
no, 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 no. So
No.
388 employees, but look at the size of the business, right? $40 billion company. You would have never guessed that had you not known that, and you don't know it's a REIT, because now you know that. But if you don't know it's a REIT, and I just told you $40 billion company, you would have not probably guessed it had 300 employees. Probably wouldn't guess. I don't know how precisely accurate that is, but it's within the realm. Okay, so let's see. I got a new question here. P. Morton, actually, I just did a write-up on SPG, which is interesting. You bring that up, but yeah. But anyways, what do you have thoughts on Ferguson? Ticker Ferg, leading distributor in North America, providing plumbing and appliances, HVAC. So leading. All right. Do you have any opinions on Ferg Kingdom? Because I think
I love. I did a little bit of HVAC back in the day, but yeah. I like these types of companies. The one that I'm looking at is Muller Industrials. That's the one But a lot of these are these ones. I would say they're still pretty frothy right now. So.
What are they at?
I don't know.
Relatively. Wow, look at this.
They're pretty. Yeah, in my opinion, they're still very frothy at the moment. The value. This is your traditional value trap. So
value trap. I think, he said it. Value
so just be clear. I think industrial stocks in general are very expensive right now, so you want to be very cautious with them. That's my thing. So that's my opinion. But I think they're all great. Like, they're all great. Just, for example, if we look at Caterpillar, that thing is definitely in a bubble. But yeah. Yeah. So again, industrial stocks, they've done really well last year. Great for them. All that. I think there's gonna be some decent margin compression with a lot of these companies. But again, like these HVAC companies, they might be pretty resistant, especially in places like Europe, where like they need these products more than ever. Especially with the aging population, right? On the refrigeration side of it. So
true.
I don't know, man.
Hey, also
right? Because
kind of on the other end of things, Generac's basically lost all, not related to this business entirely, but it's lost all of its pandemic gains. Have you seen that?
Yeah. Generac is that's another one that's like, it's on the watch list. I don't think Oliver pulled the trigger on it, but like, yeah, that one this one has come down quite a bit, and this was a mega compounder before its crash. Even with the crash, like, it still outperformed the markets.
By a lot, yeah.
That's the crazy thing. Yep. This one looks interesting. I think this one, like, right now is definitely more undervalued than any of the other industrial stocks we've seen. So
it's going to be crazy long term what the chart's going to look like. We're going to look back and remember this big hump right here. It's like, what was that?
Yeah, what was going on in 2020?
Yeah, whoa. All the youngins are going to be like, oh, yeah, like how we look now at the dot-com bubble. They're going to look at this stock and be like, what is that?
Yeah, no, legit. 2020 was our dot-com bubble, and we just didn't know it.
I mean, like, there were a lot of stocks that was obvious. Well, I guess what you mean is, like, you know, we didn't know it was gonna like pull back, because I didn't foresee Meta going down to that level. That was fantastic.
Wait, it did, yeah.
Oh, I was like, thank you, and then
like, for example, Intel. For example, Intel. Like, Intel. Yeah. Intel's never a buy, even at $1. I would never. Trash. Oh yeah.
All right, so we're gonna discuss this. All right, so, which, by the way, let the record show, I am up on my Intel position. I am not like another channel that bought Intel in the 50s.
Oh. Yeah, Paul Goblin. All right.
Oh, we're gonna put names in there. Okay. Oh, someone just mentioned.
No. Here's the thing. No. All right. Okay, listen. So, I'm a firm believer. Like, if you're a channel that's like that, you know, that outright says, hey, I'm an amateur investor, I'm transparent, and I'm just talking about my stocks, I don't think you should, like, name drop them, right? Like, I mean, like, name call them. Like, for example, Joseph, I think he's a good guy. I think he's fine. He's just doing his own thing, you know? He's being transparent, you know? So I think Joseph is fine. I think him, the person, is fine. So that's why I never name call him. Like, we call him Bubbleson, but that's not really an insult. Like, let's be honest. You're like, like you're just calling him a bubble. Like who cares, right?
No,
But
and
like
he plays a
with
really critical role. Like I want him to
yeah,
stay
yeah,
around.
yeah.
He plays very important role in things.
Yeah, yeah. He's really good for the bottom of our stocks. But like Paul Goblin on the other hand, oh man, I absolutely hate that guy. I don't think I hate him more than you, but like yeah. Um but yeah,
No,
I can't stand that man.
I don't have like a I don't have like a
Oh, it's
hate, more of like
obnoxiousness?
annoyance. Annoyance
Yeah,
is
yeah,
was better
annoying.
like than the word hate, because
No, no,
yeah.
you hate him. Come on. Come on. Come on.
No. I'd say it's still like annoyance. Like I couldn't really watch a video. But you know, like there's
No,
people
no,
that
I
like
can't.
hate
Yeah.
watch, right?
Oh, right. Yeah, yeah, yeah.
I
But there's
imagine though,
different
as like
definitions.
this channel grows, I'm bound to, create like, I don't know, just like a couple haters. Maybe I create a ton. I don't have no idea. And then they'll
Yeah, yeah.
hate watch, right? Because that's the thing. Jeremy probably gets a ton of those.
Oh, yeah, yeah. Yo,
It's more,
Strongman. Strongman gets a lot of that
oh
because of the
yeah,
fanboys.
yeah.
Yeah, yeah, yeah.
Hate watching.
But
It's funny.
no, but okay. So the issue with like the those everything money clowns is that they think they're know-it-alls. They're know-it-alls, and they
Okay.
think that they're this and that, and that's my issue with them. Um, but yeah, he's like when the bear market, he used the Warren Buffett quote with like swimming naked, all that, whatever. Um, well, Mr. Goblin, you're swimming naked, bro. Um, but yeah,
Oh
I
yeah,
still,
because that was funny. Yeah, he said
yeah,
like
yeah,
we'll
yeah.
see who the real investor is when the bear market shows up. Bear market shows up. I think he doesn't show allocation on purpose at all
No, no,
ever.
no. Of course. He's like,
Um,
oh, I'm like 99% cash ever. And it's like, then why are you talking about stocks? Why? Go talk about gold with like that other guy that's like a gold fanatic or whatever.
no, and I
You
mean
know,
like if you're including like a private investment, um,
or
it's something like that. It's like, well, you're not doing videos about private investments, my guy. And also like, I mean, yeah, if we include that, obviously, I think my best performing investment in my entire life has been like a private investment. So yeah.
yeah,
Okay.
it's goofy. And most people's best investment will be themselves with their job. So you know the skills that they have.
Whoa,
So
someone just said something that you're gonna hate. And Arthur, I wish I could give you the microphone right now.
what did he
Oh
say?
my
What did he
goodness.
say?
You can't see the comment yet?
Nope, can't see it.
Okay, I'll read it out to you. Intel over ASML. Oh,
Dumb? No,
just
no. Is he dumb? Is he dumb?
Oh, no, wait. You gotta read the rest of the comment. Oh, just invest indirectly. ASML has crappy products. I work in a chip factory.
Oh, congratulations, bro. You work for what? Intel, probably? You do realize Intel is dependent on the lithographic machines
Arthur,
made
when
by
I saw your
SML. But all
comment, I
right,
was
bro.
like, you're gonna piss off Kingdom here. And look, he's mad at you.
Freaking clown, man. But yeah, I know he did that on purpose. But yeah. Um, oh shoot, one of my subscribers are here. What's up, Al? But nah, but seriously, like I think Intel is definitely one of those companies where I don't think you're gonna get much value as a shareholder investor. So I don't know.
Okay,
Again, the price point that again, the price point that you got it, absolutely. I think you'll do okay. You might get like 2% returns. All right,
oh,
congratulations.
so basically
But like,
negative
but like,
capital appreciation only from the dividend.
yeah, you'll only get the dividends. All right,
Only the
but
dividend. Yeah.
oh man, all the other. You know what's funny though, right? Like if we're going back to that topic of the value investor, growth investing, it's funny how they're both just holding hands. Both of them are down 50%. That stuff's always funny to me. Um, but yeah. Oh, Luckin Coffee's better because it's no. I think when it comes to Intel, I already got my exposure. I already got Brookfield, so you know.
Yeah,
And
it's
I got
tiny,
Mobileye.
but
So
yeah.
and guess which one's outperforming which? Yeah, Mobileye is outperforming Intel. Yeah.
Mobileye, there's hype in there, but remember, we're making it sound like Intel's like the big holding in my portfolio, but
It is though.
no, it's not. It's like maybe
In your heart.
5%. It's not in my heart. It's like you back it into a corner, so I feel like I have to defend it. And then that's what I was talking about before, right? Because it makes it sound like I'm just like bam, like that stock's amazing. Like that's the best stock in the world. That's the best. No, it's kind of like because I feel like I have to defend them here and there. You know, gotta be like, hey, whoa. It's not like,
Well,
I don't think it's a
okay,
too. Yeah.
no. This is basically what happens. Like the poop gets bigger and bigger, and then you're just like, I love poop, and then you like hug the poop, right? That's basically you with Intel. You know what's funny? Some
Yeah.
guy's gonna be watching this and put in the comments, "This Kingdom of Finance is so mean." I'm like, bro, I'm just messing around here. But whatever.
Gordon Thomas, Intel shill. Yeah. That's how.
Intel shit.
I mean, I might as well.
Look,
No. If we got down to it, I'd probably end up becoming like a Tesla shill or something. Like if by
bro,
accident.
legit. If Tesla got down enough, yeah, you'd probably be a Tesla shell. I think the only car company I would ever buy is Ferrari. But anyway, that's off topic. Back to Intel. So like, I think there are better chip companies in this space, but the issue is as well is that I think we're in that other cycle now, that downward cycle for chip companies. You got to be careful with them. So like, that's why I like them more on the equipment side of things. So like ASML, KLA, those are more better options in my eyes. Um, Investing in an individual chip company is tricky because some other chip company will come out with better technology and then take market share.
What about this guy?
Talon's. Yo,
Never
these things
mind.
are gonna get.
What is this? Why is it?
What is this? What is that?
Don't ignore that. Ignore that. That's
All right.
TSM.
All right,
Oh,
no.
I did wrong.
I will
wrong
say this.
trigger.
Okay.
Yeah.
Okay. So the one bullish thing with Intel, I will say, if Intel becomes like the Taiwan for the States, that might be interesting. I just don't know how much shareholder value you're gonna truly get out of that. And again, I love Pat Gelsinger. I think he's fantastic. I think he's done really great things in the past.
Whoa. Calm
His
down,
VM,
Intel shill. Calm down.
yeah. No. I'm a Pat Gelsinger show. I think he is the Michael Jordan of semiconductors of all time. Like he is incredible. But like, just because you got a good guy in your company right now, if it's too rich, because you have very critical opinions of Disney being very rigid, correct? Like rigid with their bureaucracy and all that, right? I think Intel is that same situation where the old management, they made it so trash, and their culture that they have is pretty bad as well. So, it's kind of interesting that you're investing in something that it's pretty ironic.
Well, I disagreed with their capital allocation when they were in the 50s. And funny enough, that saved me from that investment because I was like, I disagree wholeheartedly with what they're doing, what they were planning. And then when they showed me that they changed, and also what really helped was the price was about 50% cheaper. It had fallen by 50%, right? We got what happened for that one person, unnamed person's analysis on every stock.
The goblin. Yeah.
So we got that, and then we got a change in capital allocation strategy that I was kind of getting behind. I was like, oh yeah, I can get behind that. Don't sell assets willy-nilly. The partnerships with Brookfield made sense to me. Less risk, less reward on it, but less risk, very important. And you still get the development. You still get you still have control. So yeah, I like that, and I was like, all right, it's not too difficult to convince myself to take a position in Intel, and at these prices.
Okay. No, but my thing is this: why Intel and not Brookfield? Why not Mobileye? Why not ASML? Why does it have to be Intel?
Got you. Oh, okay. Go finish.
No, like why not have the fruits of why don't you get your tendies indirectly in Intel? Why does it have to be Intel itself? You can benefit off of Intel without investing in it and have more shareholder appreciation.
Okay, here we go. So first one you mentioned Brookfield, right?
Correct.
All right, so reason why not Brookfield? Brookfield I used to own in the past, don't own it right now, but right now Brookfield, when you're buying Brookfield Asset Management or the Brookfield Corporation, which is actually the one that you'd get the exposure through, that one you're buying into a whole bunch of other things, and you have exposure to a whole host of different factors. One of them being it is an interest rate play, by the way. So I'd have to consider that. And you're right, if Brookfield was a huge piece of my portfolio and I could kind of measure it out as being like the percent, involvement in Intel is somewhat meaningful. All right, cool, whatever. But I don't think it is actually as far as the total pie, by the way. But yeah, you're not getting the full exposure to that. You're just getting a little piece within Brookfield. And again, you're exposing yourself to a bunch of other things. ASML, think it's overvalued. And what was the other one?
What did I say? Okay, Brookfield, ASML, and Mobileye. Yeah, yeah.
Oh, Mobileye also valid. I think that holding it through Intel, I'm getting all these other things and still have exposure to Mobileye. That was actually
Even though yeah, yeah, but with Mobileye, very tiny part. Again, it's like very tiny with Intel as a whole.
yeah, exactly. And personally, I'm not too interested in investing in isolation just Mobileye. Not for me.
Are you against Israel? No, I'm just kidding. I'm kidding.
Whoa,
Kidding.
whoa,
Yeah, period.
whoa.
No, no, no. Whoa, whoa,
Whoa,
whoa.
whoa.
What we got over here? Nah, but like, okay, no, that's all fair. But again, I think of wait, BB. What is this?
Oh, sorry.
Bed, bruh.
What is this? What did I pull up?
What is it, bro? It's a small cap. Wait, yeah, it's a small cap. 182 million. Are we even allowed to show that?
No, we're not. I'm not gonna give it my blessing. Are you kidding me? Do you know this? Do you know this company?
Oh, I barely know it. It's like it's one of those degenerate plays, isn't it?
Yeah. Look, this is hilarious.
Isn't it popular by retail?
Yes.
Oh yeah. That's why I probably don't know it that much.
Sadly, no. Literally, I think the CFO took his life.
Oh yeah. That
This is the
story.
one.
Yeah. That was very sad. That was very sad. But I think he was probably gonna go to jail, right? Because it was like a pump and dump. I don't know.
Was it?
Whatever.
Oh,
Whatever. All allegations. He's already went to the, he's in that park lawn. So rest in peace.
Here we go. We have liquidation sale underway. Huh? No,
But in your
I ain't subscribing. Get out of here,
uh,
Axios. Yeah, right. All right. Wow. The end of an era. All right.
yeah, that's gonna be basically you with Intel. Not gonna lie.
You won't review it. You're busted.
You're just like quiet. You're just like.
No, that does technically mean that. Yeah, gosh. No, but I'm not. I haven't bought it. Elemental Tomago. No, I'm not buying it. But technically, by what I just said, that does imply that yes, I am like in favor of the nano cap you mentioned. So yeah, guys, logic, right? It can't go any lower, right? Obviously. How
Yeah.
I'll buy it here at $2. It's $2. It can't get much lower than that.
Yeah. And like the trading YouTubers, they're gonna be like, listen, man, we bought it here, we sold it there, LMNOP. Like,
Well, can I show you? Can I show you? Home Depot. Did you know, Wink, that this used to be a penny stock?
Oh my God, I hate it when people say that analogy and they like do it for TTCF. They're like, you got to invest in early to make money. It's like, no, that's not how.
You could have been buying
you
this
probably work
penny
at
stock.
McDonald's.
We're making fun of a very large content creator that I have no idea how he's a very large content creator. I legitimately said this, by the way. Legitimately, like,
He said
not
it?
joking. Yes. You know which one I'm talking about, right?
Lafufu?
No. I don't think even. Well, I don't know. Maybe press to the question, he might say something like that. It's a different.
Okay. Well, just say the name. Say the name. Which one? Who is it?
It starts with an L.
Lafufu. That starts with an L, right?
No. His name's not L. That is funny. First name L, second name J. LJ.
LJ. LJ, bro, who is that guy?
Yeah, someone said it. Arthur said it.
Who is that? Hold up.
If you don't know who that is, don't bother. Don't look it up.
The freaking what's his face?
That's funny.
The Dave Ramsey wannabe.
That's
the
funny.
Dave yeah. The Dave Ramsey wannabe. Yeah. Okay,
LeBron James.
Yeah.
That's LeBron James, guys.
LeBron James, freaking more like
LB,
LeBum
yeah.
James. Man. Yeah, whatever. Larry Jones. His daughters are great. Anyways. They're gorgeous. They're gorgeous. Anyways. No, but besides that.
That just took like a huge turn, guys. That took a huge.
No, my bad. I keep that on the Discord. Keep that on.
Like we're going to the right, and then Kingdom grabbed the wheel. And he's like, "No, we're going left."
I'm going to the wall. No. Okay. Hold up. All right. So like,
you're bringing the chat into starting to say it. All right. Anyways.
Yeah, no, they are.
No. Okay, I'm grabbing back the wheel. I'm grabbing back the wheel.
Grab the wheel. Go back.
We're going. We're going back.
We can sip for them later. All right. All right. Anyways.
No, you can simp for them. I'm not simping for anyone.
Yeah. Yeah. You're married. Yeah. 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 Also, you're a. No, I'm just kidding. Okay. So, yeah. These penny stocks, man. I'm telling you, I don't get it. And it's funny, right? Because like with these content creators, they always get a new breed of retail investors, or maybe the same ones. Maybe the same ones that just keep falling into this stuff. Um, but there was that one clip of hold up. What was I gonna say? What was I gonna say? Oh yeah, yeah. So echoes from above. Did you watch that new video from him?
Which one? The one today?
The newest, the one that was. Hold up. Let's see if I can find
Was it
it.
the individual who made a video talking about Jeremy financial education and
Oh yeah, Jeremy's the biggest joke in finance. That one. Yeah, 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 yeah.
he
It was still today,
yeah.
but yeah, there's some other guy I was talking about. Yeah, yeah.
Unironically, I think he is becoming that. And if there are people who still unironically, I don't know. I'm not gonna say
This
it.
one clip that
You
I
do
have.
what you want.
There's this one. Yeah, there's this one clip that I have. But basically TLDR, Echo said like, that we're a bad person for saying that, people should have accountability. Yeah, no, yeah, no.
There's someone who
But
says that you're a bad person.
okay, no, hold up. Echo said it in a clip. Obviously, I'm just messing around with Echoes, but like, I'm gonna still show you.
You want to have that discussion? Yeah, yeah. I feel like there's even more profound blame to like the YouTube audience because like they created them.
Yeah, let me find the clip. Let me see here, and then I'll drop it into the comment. Hold up.
But I'm not the one saying also that I don't think that they do have blame. They have blame, but like there's blame in both directions. I think Echoes in the video said that there is both blames. It's just like different degrees of blame.
Okay, let me send you the clip, and we can watch we can share the clip to the whole audience.
Who was trying to show you on AMMPF?
All right, so I DM'd you the clip. If you can like copy and paste the clip and show it to the whole audience, because that's the part I want to discuss about with the audience, with all of us here.
You guys who keep saying it's nobody.
Pause it. And
Yeah.
then put here. And then we're back. All right, cool. Let me do this.
Nobody's fault but your own. It's your fault. You should be kicking yourself. You guys are bad.
Can the YouTube audience hear
I'm
it?
just gonna keep it all the way real here because my thing is, okay, well, if it's his fault for getting scammed and swindled by a grifter and a fake guru, then by your logic, it's everybody's fault who got scammed by Sam Bankman-Fried too. That's right, it's their fault. They put their money in an exchange that was being run by you guys who keep
that's
saying
pretty much the
it's
clip.
nobody's fault but your own.
Okay, so, but that's pretty much the clip. And again, I think there's some truth to that when you're just shaming people. But I think it's another thing where it's like these people should not take accountability at all type of deal. You gotta be humble, right? And you gotta like understand that. When you make a mistake, you don't point fingers. You look back at yourself and be like, what did I do wrong? Why did I listen to this person? Right? Why did I drop all this money? I only feel bad for the people that are like 59, 60. Because those people, it's done for them. It's done. They're done. But if you're like 22, you lost $3,000 into TTCF, you can recover from that. But so that 22-year-old, I will have no sympathy for, because for that 22-year-old, if that person turns around and says, no, it was the market's fault, the market's rigged, I'm going to buy the short squeeze or whatever, those are the people I have issue with. You got to take accountability. If you blow up your account, that's on you. But again, if you're like 59, 60, that's where like I will not say anything to them because I'm like, yeah, I get it. Your life, you're done. Like that's it. There's no recovering from that.
I'll say like, well, Bacon's asking, how do you get that from what Echoes said? I think Echoes did say that there is blame, but I think he said in the video like 20%, which 20%, 80%. So 80% falls on the individual, the content creator that was basically providing like because like, there's a difference. Like selling a service to tell you that you will outperform and then the person who then subscribes to that service under the I don't know illusion.
No. And I hope the commenters aren't saying like I'm some anti Echoes. No, Echoes is one of my favorite channels. We gotta use that clip as an example of like it's because again, you're allowed to disagree. I disagree with Fabio on like literally all his positions, right? Like it's just disagreements. It's healthy disagreements with your buddies. That's all it is. That's how I view it.
Whoa. What about my largest position? You're like a shill for that company.
Which one? Intel? No, that thing's trash.
My largest position is not Intel. Fake fan.
No, I'm messing around. It's more so like again, Echoes is a bro. He's a homie. It's just like you're allowed to disagree with them on what they say, and that's all. That's all I'm saying right now. But I disagree with what Echo said. I think it's more so. I think it's 80-20 in terms of the person should take all the blame.
He said 25-75. 25-75. Not 20-80. 25-75.
Okay, so for me, it's more so flip that. 75 blame should be the person that bought TTCF, not the other way around.
Okay.
Because at the end of the day, like you say, who created Jeremy LaFay? The audience.
That's what I say. Like
that's what you said. That's what you said. Those are your words, exactly. Yeah. I'm not taking credit for that. No, you said that. So like, but again, it's the audience that creates these people in the first place. So why are you going to blame the actual creator when you guys are the ones that created him in the first place, right? So. It's like the chicken and the egg argument type of thing, right? So I don't know.
Yeah. Can I get your opinion? Okay, so Gil's asking something. He wants your opinion on this.
Echoes. No, I will never. No. I'm on Echo's side. It's just like it's a disagreement I have with Echoes with that one sentence. That's it.
We're gonna get to Costco after this, I guess after Gil's question. Oh gosh. Okay, you guys are gonna get the spice on this. I can tell. By the way, I'm trying to set up the debate between Kingdom and Strongman, and there might be a tag team debate between Kingdom, another member of the community who is in there. He's a moderator, Dan, and Jay Nagy. But we're still setting that up. I got to be free, and all 4 individuals, or if not, just the 2 individuals need to be free. So it's a bit of a, logistics. But anyways, this question from Gil. So is there on Strongman helping Nash with stock MVP? I guess he wants to know how you feel about it.
On Strongman helping Tom Nash with stock MVP, is that his analysis tool?
Yeah.
Look, at the end of the day, like I couldn't care less. Like I'm just doing my own thing. If Strongman wants to keep shilling other garbage channels, then that's on him. Whatever. I think it's moronic to be partnering up with guys like Tom Nash. That's my personal opinion on that. Because again, Strongman's brand is trying to be similar to that of CoffeeZilla, correct? Right, Grifter Slayer and all that.
Yeah.
Yes. So if that's the case, you should I like the Echoes approach where he's not friends with anyone because that's exactly how CoffeeZilla approaches himself. So Strongman needs to be a lot more careful with who he's trying to be buddies with. And if you're trying to be buddies with grifters, yeah, that's an issue right there. So Tom Nash is not someone you want to be friends with. Bacon Bombs, I don't like you. That's pretty much it. Anyways.
Whoa. Oh, we got
Whoa. I didn't mean that. I totally didn't mean that. Whoa. I'm joking.
I gotta stop the spammer. Oh.
Yeah.
Oh, we got attacked in the comments. The spam. All right. So the debate, by the way, for anyone wondering, the debate's going to be concentrated around a couple key points, right? The concentration of international, or the debate of the quality of an index fund like VT versus other index fund opportunities or options out there. Another part of the debate will be concentrated on dividend investing, whether or not it's a good or bad thing. And from there, the audience will also be able to bring up some topics, and I think there's other disagreements. But that's kind of like the 2 broader topics, and then there's going to be subtopics under that. So
I gotta say, if it's like me and Dan versus Strongman and Jay Nagy, it's not even going to be close. It's going to be complete obliteration, man. Jay Nagy's talking about underpriced the book on everything. And then when a bank shows up, he talks about price to free cash flow. All right, bro. You're going to have one guy that's going to be plastered and the other one using tobacco. And you got me and Dan that's going to be very sophisticated. It is what it is. But yeah.
All right.
Oh, you guys
That's basically
yeah.
like, that's the fighters kind of seeing each other before the fight, and you're just like talking smack.
Exactly.
Because everyone's friends at the end, but like it's funny. So I think it's gonna be an interesting debate. So we have some questions, right? There's Costco. My goodness, like what price would Costco be interesting at? Oh God, don't I hate
Dude,
looking
I
at
love,
Costco.
man. Bro, I gotta say, Costco and Hershey are those two I would love for them to be in my portfolio.
Yeah, but I hate looking at Costco because it reminds me that it's not.
Yeah. It reminds you that like you're a moronic for not buying it at any price. This is like one of those few exceptions to
No,
that.
Can I tell you a story? It's really sad. It's really sad. So it was like freak. I think it was like 2016, 2017. It was a long time ago now. I think it was 2017. No, maybe 2017, 2018, somewhere around there. I don't think it shows it. And if I zoom out, it's too zoomed out. It was right here. It was this drop right here. Yeah, this is it. I remember this day. And a buddy of mine told me buy Costco on the dip, and I was like, no. Yeah, no. Hindsight, dumb. Hindsight, really dumb. And I forgot what it was. It was the earnings report, and then the stock like cratered in a day. But anyways, whatever.
Well, no. Well, Fabio, at least look at the half glass, full. You make that one mistake of a company overvalued, that one exception, but then you buy everything else that's still pretty decent, right? So that's the way I go about it. Yeah, sure, you missed on the one overvalued company, but you probably did well on the other ones that you bought undervalued, right? So
yes.
Yeah.
No. I've done
Exactly.
well. I've done well. I'm
yeah.
happy. I'm happy.
Besides Intel's the one I don't know. Like, it is what it is.
Well, I don't want to spoil it for the audience. The one that I did sell at a loss, because they haven't seen the portfolio update yet. No, you guys already know which one it is, but like, I haven't done a portfolio update on YouTube yet. But
What do you mean? I don't even know. I have a really
fake fan. No, I'm kidding.
No, dude. My short-term memory is like real bad. Like really bad. No, it's like really bad.
All right, I'm gonna text that to Strongman so he knows your weakness.
Yeah. Weakness, my man, Belly Boy. Like his weakness is if you take the tobacco away
shots
from him.
Are being so
he won't eat to chew. You take the tobacco away from him, this guy can't brew like a pig anymore. So whatever.
Oh my goodness! All right.
Oh, no. By the way, I love Strongman, but like I gotta rip on him, bro. We gotta debate.
This is literally like I gotta have him on, and then he's gotta talk smack about you, just like
yeah. What did you get smack about? Me being bald? Great, fantastic. Freaking, I'll go the rock on you, bruh. I don't know, man.
The rock on you.
All right.
So
whatever.
for Costco price, it's still a story that I think it's priced for everything I could possibly think of, and it's just priced for certainty of expectations. I'd be very concerned with they have China exposure, so not like a crazy amount of China exposure, but just the narrative changing around Costco could at that point I'd be interested maybe, because I'd be like, maybe everyone's like going from Costco's fantastic, best business ever to, oh my gosh, the business model is broken, that kind of moment.
So that's my speculation though. I think a lot of these, I don't think none of this is priced in. I do think that like this decade will be the decade where you're going to see deglobalization, where you're going to start seeing U.S. companies outside of China. So that Chinese concentration, it's going to be a massive headwind for a lot of companies, a lot of U.S. legacy companies. So it's going to be really interesting to see. But anyways, for anyone that's interested in like a wholesale stocks, look at BJ wholesales. That's
whoa. Okay.
Whoa. Listen, I get it. You and Gabe, I get it, Fabio. No, I'm just kidding. I'm kidding. No. But like BJ's wholesale. Oh, that's an interesting one. It's a decent value play in the wholesale space. But, yeah.
Okay. All right. So what do you think about UTS? Because this is another question that we got.
Bruh, what is this?
Oh, Rob H is coming for you about Intel right there. He's like, deglobalization benefits Intel, right, Kingdom?
Deglobalization. Oh, yeah.
Yeah, he's trying to shift the narrative now. He's trying to like, oh, no. Globalization.
Oh, no.
Intel's
No, but like, no. Okay, but seriously, like, if we're going to, so are we talking about UTZ or are we talking about wholesales? Because like, BJ's is interesting.
All right, well, I want your quick thoughts on UTS brands, and I'll give my quick thoughts on UTS brands.
Website. I don't know anything about them. Do you know?
Yeah, do you know what? They're a consumer packaged goods company. They sell a lot of these snacks. Look at all the snacks. Wait, let me go to their brands. What are their brands? Oh gosh, shop by
We
product.
gotta ask Belly Boy, but no, I'm just kidding. I'm kidding. Okay,
All right, so
I'm
here you
gonna
go.
stop. I'm gonna stop. Gonna stop with that.
All right, so you got all these brands, all of them called Utz. You have these guys. Oh, these are fantastic. Oh, these are really good. These
Never
are
seen
really
any
good.
of this stuff.
These are phenomenal. If you can get your hands on these, I mean, they're not like hard to find, but like they're really good, by the way. These are pretty good. The chips are pretty good too, not gonna lie. I'm very hungry. Oh, I just realized that. A lot of pretzel stuff, if you haven't noticed, but oh, these are pretty famous.
Are these
Cheese
like
balls.
are these like American only brands?
Yeah.
Is that what it is?
These are also really good. These are also really good. The Voodoo chips. Yeah, actually, I just realized we get a lot of these for watching movies. Huh? I didn't know they owned this brand. Utz is like their classic brand, and you'll see these at gas stations, grocery stores, everywhere pretty much. But yeah, wow. Because I really like these, the Voodoo chips. Oh, phenomenal. And again, these guys over here, phenomenal.
All right, so like
Pretty good.
it's like good food, right? That's
Yeah,
basically it?
snack foods,
Okay.
and apparently
all right. Well,
socks.
bro, what?
You can randomly buy socks in there. Okay, well
Oh.
that's funny. That's humor. A sticker, socks, more socks. Wow, I just might buy this. Oh, a sweater. Oh, all right. I'm buying the stock just because of shirt, sweat, like apparel plus food. All right, cool.
They got hats.
They got hats too. They got holiday decorations. What is going on? But yeah, you get the picture. It's like mainly snack foods. So snack foods, by the way, if you're like thinking about the other snack foods giant, which one is the only one that you can think of? Go.
What's the one with the peanut company? I mean,
Oh,
besides
are
PepsiCo.
you
Besides
kidding me?
PepsiCo.
Oh, okay, I was like, I was like,
But besides
what?
PepsiCo, there's one called JM Schmucker. I think that's what it's called, right?
Yeah, JM Schmucker. Yeah, but JM
Yeah,
Schmucker, you're getting a bunch of other things, not just snack foods. So
yeah,
you
yeah.
go, man.
Bro, I love their peanut butter though, bro.
Whoa, that was said in a very strange way.
Whoa! What you mean? Like you're just thinking in that way.
That's
Come on
basically
now.
becoming part of the show now. Like all of, each other accusing the other of meaning different things.
Yeah, exactly.
But I'm serious. The way you said that, you were very excited by the peanut butter.
Yeah. Listen. You can interpret it as like moans, whatever, man. It's
Yeah.
all up to you. But yeah,
Everyone's guessing
let's-
Frito-Lay. You're the only one who went to peanut butter. I mean, like everyone else is normal. That's not normal. Thinking peanut butter. When I say what is the
peanut
other?
butter to go? What?
No, but like I say, okay, think about a snack foods company, right? Snacks, and then there's
My
the,
bad.
there's
Yeah.
the obvious one that everyone in the chat like is saying.
Yeah, saying PepsiCo. Yeah.
And then-
Frito. Yeah.
Okay, we got to
just
craft.
thinking
We
peanut
got to
butter.
craft.
Yeah.
No one said
Listen, man.
Mondelez. Kind of disappointed that I didn't see that one, but
Mondelez. All right, but let's look at the financials. Is it good? Is it bad? Is
no.
it trash?
I'm talking about the Utz. You're talking about Utz.
Yeah. What's the financials looking like for this? You know which financials are bad, but they have a great product? Krispy Kreme, man. Garbage.
Oh my gosh! That's another one. Whoever,
Yeah.
if somehow this gets to the executive team at Krispy Kreme, or no, that private equity firm who did it, why would you do that to Krispy Kreme? Why would you set them up for failure?
I know, man.
Such a sad thing. They could be great. Like that's the thing. They could be great. They could dominate, but man.
Yeah, I love donuts, bro. That thing is like the goat.
Again, I don't know what's going on with the donuts.
What? Oh my, you're just thinking dirty there, man. Like, go back to Venezuela. Goddamn.
First is the peanut butter, now it's the donuts. Are they in any way connected?
Listen, man. You're just dirty, man.
I don't know.
All right.
I don't know if the order. So
All
I should be
right,
suspicious
all right.
about the order. But anyways,
Yeah.
So this is Utz brand. It has they outperformed the market in the past 3 years? Yeah, apparently
Yeah.
so. Yeah, look at that.
Yeah. Look at the volatility, though.
By the way, this SPAC'd. This is one of the few SPACs that's still above SPAC price.
Oh, that's funny. It's only at $16 still. That's funny.
Yeah, it's back at 10. But yeah,
And that's the thing. No, no, and that's a moral story with these SPACs. What's wrong with just like, or just newer companies in the markets, public markets? It's like, why don't you just wait a couple of years, let this stuff play out, get some 10Ks in, see how they're performing, and then kind of go from there.
wait. But this is a bad example because this one
No,
worked
no, no.
out.
I'm just saying in
This one
general.
worked.
No, 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 no. I'm just saying in general. Right? Like, again, when people buy these newer companies, they think, oh, 10x in 5 years or whatever, right? This is like from 10 to 16. It's like whoop-de-doo, right?
Yeah. All right, so
It's not a
let's see.
multi-bagger.
Let's see the multiple here. All right, so oh wait, this has to be a linear measure. They're not profitable anywhere. Uh-oh.
Oh wow! See, look, a basic business model that has good quality snacks. At least that's what I'm hearing from
Guarantee
you.
it's a one-time thing. No way in heck that drop is there unless it's like a one-time expense measured in the quarter.
Think an acquisition happened?
No, it's probably like a write-down of something.
Okay.
So, yep.
I'm curious. Are they okay? Look, well, let's look at the let's look at the financials. Are they like consistently profitable? Do they have a decent amount of debt on them? Like, what's going on here?
It's an annual. Okay, so sales growth is there. I know they're very acquisitive, by the way, and because they're
So
small.
they are acquisition based.
Yeah, but each acquisition can move the needle because they're very small. Like
Hmm.
I know that PepsiCo bought one of my favorite chip brands called Popcorners. They're like popcorn chips, and they're really good. By the way, if anyone gets your hands on them, the Kettle Popcorners are really good. But anyways, small brand that came up out of nowhere, and PepsiCo just bought them, and then now they're part of the Frito-Lay brand. So. Think that's how they financed the listing. Okay, so Dan's giving us a hint, right? He's giving us a hint on where to look. So we go to the balance sheet, and he's trying to point us to the direction of long-term debt. So he's saying this is how they financed the listing, or this is what he probably already found this out, so it's probably actually the case. So maybe one of the payouts was they paid out maybe their original shareholders by taking on debt, and yeah, it was like a buyout, but yeah.
I don't know. What's the cash flows looking like for this?
Cash flows. Well, we didn't even see the net income yet, but the cash flows, it's cash flow negative. Okay, let's see why. Let's see why though. Okay, is it something that's big? No, change in inventories. No, it's fine.
I don't know. In this smaller food space, I like Simply Good Foods. I think that one's a really good one.
Oh, Simply Good Foods, right? Like
Yeah,
very good food company. Same thing. Yeah, same thing. Simply Good Foods.
Yeah. Sure. Yeah. Simply, they're the one with the Quest bars. They got the Atkins brand. These guys are fantastic. Valuations is the only issue with them, but everything else is pretty good.
They're priced for it, aren't they?
Yeah. They are priced for you. Yeah, their valuation's a little bit rich, but like good high quality business.
Okay, I'm game. Okay, so, what is this flatlining over here? Are they getting acquired?
I don't think so.
This is very suspect. Massive
really
jump all of a
sus.
sudden, and then just straight across.
Yeah.
Are they getting acquired?
No, I don't think they're getting acquired. I don't think they're.
What is the date that this happened? October. Can't be a CFO name. Like, what, really? Is that actually?
Yeah. Oh, Sean is now the CEO to the moon, and then
To the moon.
Oh, nothing. Yeah, nothing happened.
Oh no, yeah, it's an earnings beat. Raised forecast.
Okay. No,
Earnings
that's
beat. Good. Valuation.
Yeah, they raised forecast. Yeah. No, they raised their forecast because they have a really nice subscription based model with the keto diet thing. So margins are actually pretty good for that.
Okay.
But yeah, I don't know. Good company. The returns have been good. I think it's been around since 2018 in the public markets. But this is one of those companies where it acquired the Quest. You might want to do Max chart. I think they'll do a better picture for you. Yeah, just click on Max. Yeah, it'll do. Yeah, that's better. Yeah, but 200% return. I think 2017, 2018, something like that. But yeah, it moved the needle for them just acquiring one company, which I think it was they were Atkins and they acquired Quest Bar, or the other way around, something like that.
Well, I'm telling you, if you think that same exact law, I'm kidding, But where? Wait, how far do I have to go back? Dang it! All right, there we are. Hey, look, it actually has a high short interest coming in here, if that's correct.
Yeah.
But no,
Yeah,
I think the one you're talking about, Simply Good, probably higher quality.
Yeah, their financials are a lot better. Cash flows are a lot more stable. They got a decent subscription model to
And hey,
it.
man,
This one's more like
the Quest brand's actually really strong. Quest brand's,
it's a strong brand.
yeah, it is a really strong brand. They have Quest cookies. Like people actually, I know a lot of people that like it. Right, I see it everywhere.
No.
Like little
Again,
healthy,
both of their business, yeah, both of their business segments are high quality. Like Simply Goods is definitely one that, at the right valuation, that will be my food stock. Besides the nano cap, that I have as well.
yeah, just go ahead and just throw that out there. It's like, oh yeah,
No,
I miss
no,
a
no.
nano caps.
Yeah. The nano cap food company, I can't show that one. That one has a 20x though, 5 years. Now people are gonna be very curious. Oh, what was
Oh wow,
that?
they compete against Tattooed Chef. Look at that. No, I'm kidding.
No, it's keto. It's keto. But yeah, I really like this model a lot. And I think the valuation is justified for it, but it's a little bit. I wouldn't say priced in for perfection because the growth is still being really respectful. And again, if they do an acquisition, right, that's going to move the needle for them quite a bit.
How
They have
much
a
is
decent
this?
cash pile.
Like how
What's
much
up?
is this? Let me see the view. Atkins 20, Atkins 40 grams, 40 grams of net carbs per day. Oh dang! So this is like nuts. All right.
Yeah, again, keto diet. So like, yeah, that makes sense. It's low carbs, high fat, and protein.
I'm trying to see like what they charge though.
Oh yeah. What's their meal? Yeah, well, look at the.
Get started. It's gonna like I'll look. I'll investigate later. You dang. Okay.
Yeah,
Go ahead
investigate
and
later.
like,
But again, no. But again, like out of all the very good food company or Beyond Meat, TTCF, the actual good healthy alternative. And again, TTCF is not healthy at all. That one's garbage, like really bad for you. But this is genuinely healthy stuff. Their Atkin brand and Quest Quest bars, all that. So this is like the genuine healthy stuff right here.
someone said highest IQ says no brand is stronger than Tattooed Chef.
Yeah. Tattoo truckers, blank, whatever.
Pump your nano. Buddha Bowl has a
Yeah.
stronger brand. That's funny. Oh, the community is so funny. All right, so who is Ghost Energy owned by? Curious of that answer too. Let's
What
see.
happened?
I'm looking at who owns Ghost Energy. Oh no, it's privately owned.
No.
It's Ghost.
Can we pull up? Yeah. Oh, yo, Cherry Tigers. No. We're not showing no TTCF on here. F that, man.
Can we pull up TCCF's nutrition facts?
No. Trash.
Okay.
Like you can do that on your own time. Like that thing is absolute garbage. Oh man. I mean, aren't we getting close to the 2 hour mark?
Oh no, we
Or
passed 2
3
hours.
hour mark?
We blew past it. All right, we'll close
Oh,
it off
wow,
here.
All right.
We'll close off here so it's watchable. But thank you guys so much for watching, and we're gonna have the exit video as always. You guys have been awesome. Thank you, Kingdom, for coming on. It was a great time. It was a good hangout. That's why we lost track of time. And we're just like, oh. But this is a solid food company. Not gonna lie. Okay, it looks pretty good.
It's good. Yeah. High quality business.
Yeah. Okay. All right. Hope you guys enjoyed it. If you guys did enjoy it, feel free to leave a like. Check out Kingdom of Finance's channel as well. And we'll see you guys on the next one for You Will Lose Everything, episode 3. Oh, we didn't talk about the bank stock. Well, whatever. We'll save that for next week.
time.
There's always stuff
Yeah.
to talk about. All right.
Yeah. Price to free cash flow. JP Morgan,
Interest rates go up there.
Yeah. That's it.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.